on that report. Plus, restrictions tighten as virus cases surge across Europe. Italy is the latest government to add lockdown measures, but prioritizes its struggling economy. Matt.
Let's take a look at futures. A little bit of a mixed picture when we last looked about an hour ago. And, well, it still looks the same. FTSE futures, little change. DAX futures and other continental equity index futures are actually gaining a little bit this morning. Now, when the live trade kicks off, we'll pull up the global macro movers screen on the Bloomberg. You can see a number of risk assets across the columns here. The far left-hand column will show you equity indexes, and it'll populate as they open up. The FTSE is always the first out of the gate, and actually up a little bit, although it's only a fractional gain right now. The IBEX 35 in Madrid gaining 0.5% this morning, and as I said, the continental indexes, the continental index futures contracts were pointing higher this morning, so you're bound to see gains there. Indeed, the CAC and the DAX are now open, up 0.4 and 0.3% respectively. So European markets generally opening higher after strong GDP data out of China set an optimistic tone for Asian stocks, and some positivity returned about both a U.S. stimulus deal and the UK's stance, although much more importantly, Europe's stance on Brexit. Joining us now is April LaRousse, Insight Investment Fixed Income Investment Specialist. April, what do you think about the possibility of a solution for these problems? I guess Brexit right now looks like one of the easier ones to solve.
Well, I don't know if it's easy. They seem to have been wrestling with it for a very long time. I know that obviously this is a negotiating stance taken by the UK government to try and get a better deal. It was always going to go to the wire. But it does look like now there is some realization from sort of the UK negotiators' perspective that they need to do something to get a deal. If you recall, when Carney was running the Bank of England, the Bank of England did some forecasts which said that if they don't have a deal, or an Australian deal, which is a no deal, it was likely that you would slice 5% off UK GDP. We really can't afford to lose 5%, given how weak the economy is already. The other thing that would most likely happen is inflation would be considerably higher. The forecast from the Bank of England was up 5% due to food prices. I can't imagine that would be a good scenario for the government. So yeah, we are expecting that they'll get back to the table, and this will go right down to the wire.
And April, good morning, if we do think about the possibility of a no deal and what markets might do in response, you've mentioned inflation, so I assume inflation expectations move, gilt markets obviously move, the pound drops. I saw over the weekend 5 to 10% drops were suggested by a couple of different houses. But what about the possibility of negative interest rates? Would the market quickly move to price that in as a possibility on a no deal?
Yeah, well, they've intermittently priced that in already. It sort of goes into the money market futures and comes out again. It's clearly in the box. It's just the last tool in the box. They'd like to do more QE. They'd like to use forward guidance as other ways of bolstering the economy. We definitely think that sterling would weaken, although clearly it's weakened a touch already. Gilts, it's unknown how the gilt market would perform, because clearly very weak growth would most likely lead to a flight to quality, and gilts might perform well. But of course, then people would worry about increased issuance. So the gilt market is it's not an obvious place to express your views. Probably sterling corporate bonds would underperform. Front end of the break-even market would actually likely perform quite well. So if you're looking for an opportunity, short-dated index at gilts would likely to perform very well in that environment.
April, what does the Moody's downgrade mean to you? What does it mean for markets?
Not a whole lot, honestly. I mean, we more pertinently when we saw Italy downgraded by Fitch to BBB. I mean, they're right on the edge of investment grade. That's a lot more meaningful for markets when they're thinking about things that are different. When it's sort of small moves, one notch or so, I don't think the market is looking at the UK as having any real credit concerns at this stage.
April, when you look at German assets, I wonder, do you think that the market had been pricing in a better handling of the virus, and is that now at risk? I should also mention, I said erroneously earlier on that the German market was the best performer in terms of equity markets in Europe. Of course it isn't. There are smaller markets that have done well, but the point was, out of the majors, it's done relatively well against Paris, against London. Is the market assuming then that there's some decent handling of the virus, and that means better pricing for German assets, and that's at risk, or is that not part of the story for you?
Well, I mean, we are looking at Europe, and actually looking at the bond market on Friday was really interesting. It had been trading at a range for months, really almost more or less since April, and suddenly we saw it, take a big leg lower. So, looking at 10-year bonds at -60 and thinking, oh goodness, could they go to -85 like they did back in March? When we're looking at the outperformance of European bond markets, we're thinking we can understand why the bond market has done so well on this flight to quality type view. Obviously, the things we're looking at now is to what degree virus numbers ticking up even in Germany impact the market, and expectations of perhaps additional stimulus. We think actually that investors are likely to look at some of these big moves in Germany in particular and start thinking profit taking might be the right thing to do. The European bond markets have been quite distorted by the huge amounts of QE. So there's really not a lot of free float. So when you do see markets starting to move a certain way, the fact that there's less liquidity out there, thanks to QE, means that markets tend to get very jumpy. The fact that the core markets have been doing very well, shouldn't surprise anyone given the uncertainty of the environment we're facing currently.
April, thanks very much. Thanks for joining us, and stay with us. April LaRousse, Insights Investment Fixed Income Specialist. She stays with us a little bit longer on the program. Let me just get to a little bit of breaking news. We've had the European equity markets. Boohoo has been a focus for investors from a governor's perspective for many months now, and we see that the shares opening to the downside, down by 11.3%. This follows the news that PwC, well, Boohoo says that PwC is still the auditor, but Boohoo is seeking a new auditor to replace PwC amid the Labour issues that have been much talked about in the UK press. Coming up on the programme, caught in a stimulus trap, with central bankers focusing on keeping the taps open for now. Will they ever be able to stop the money from flowing? This is Bloomberg.
continued recovery is anticipated, which will benefit the global recovery. I think that the main risk right now we see is one is a macro leverage ratio is increasing.
The risks remain very heavily skewed towards the downside. So to borrow a phrase from sport, I'm afraid the hard yards are still to come.
All that you did not buy in March, you're going to buy it in September. But the vacation that you could not take in May, you're not going to take it in October.
If growth expectations drop and financial system becomes unstable, the economy could fall into a full-fledged recession.
If you were to graph this, after the great decline that we saw in March and April, the recovery looks something like this.
As global central bankers speaking over the weekend there in those clips, the majority of policymakers then are under no illusion that the fallout from the coronavirus is over, issuing fresh warnings about new government restrictions, struggling recoveries and threats to jobs. April LaRue's Insight Investment fixed income investment specialist is still with us. And April, it's interesting, we talked to some who follow the credit markets and they suggest that you don't need to worry too much about large caps and bankruptcies over the winter months, because those with access to money markets will be able to get access to further borrowing to help them get through. Is the smaller caps, is that where the crisis goes over the winter?
Yeah, absolutely. I mean, I think it's been really interesting, the differences between the global financial crisis and the concerns that we had then, where, frankly, companies couldn't access capital markets almost regardless of what level they were willing to issue. And this time, where there's been a massive amount of issuance at incredibly cheap levels, and actually companies have been doing something else. They've been tendering and calling their bonds early to the extent they can and issuing even longer debt in order to be able to lock into these low rates. So if you're a big business, you've actually had no trouble getting access to liquidity. And if you're a big business in Europe, you've had even less trouble because of TLTRO, meaning banks actually want to lend to you so they can then borrow from the ECB at an even lower rate. So, big businesses, yes, of course, they're concerned about their bottom line, their ability to generate cash, but they have many levers they can pull in order to get liquidity. Smaller businesses, much trickier. Yes, there are programs across Europe and the UK to help support smaller businesses, but they don't have access to capital markets in the same way. And that will obviously be a concern for defaults going forward. There is a possibility that central banks in Europe may cut rates more, but the jury's out on that one.
Why is there so much investor demand, April? And the thing that I find interesting is that there's so much money out there to buy this stuff. I mean, why buy debt that doesn't return very much when you can instead get into a stock market that's on fire? I mean, the S&P 500 is up 8% year to date in a year when the economy is seeing, its worst recession maybe since the 1930s.
Well, that's probably a really good reason not to go chasing risk now. I mean, there are some concerns that the markets have obviously responded to a stimulus which is 3 times as large as we saw in the global financial crisis. So clearly, there's no inflation anywhere except in financial markets. So that doesn't make a lot of investors look at equities and think, if they went up a lot, I'm going to buy them now because they're likely to go up even more. There is more of a concern about, oh goodness, if we're just starting to see, a weakening economy hit, corporate bottom lines, do I really want to be buying into risk assets in terms of equity markets? They're more willing to buy bond markets even with low yields because of the higher levels of certainty. I.e., if they're buying an investment grade or in government markets, they're thinking, my capital is safe. I will get the principal back and most likely the coupons. Whereas in the equity market, there is some concern that valuations look a little bit too stretched.
And you say, April, there's no inflation anywhere. For how long do you expect that statement to be true?
Yeah, well, the deflationary forces are huge in the economy now. And so, although we can see lots of arguments to say that longer term you could see some inflation, in the short term, it's really hard to imagine that certainly for the next year, even 2 years, that you get anything like the levels of inflation that most central banks would dearly like to see. The levels of unemployment are likely to remain higher. as the Bank of England keeps saying, the scarring in certain parts of the economy is likely to remain a fixture. And so, the deflationary forces are there. Now, let's put a little health warning on this. Sterling is something which could cause inflation if it drops sharply, although that would be viewed as an external factor and therefore not real inflation that anyone needs to worry about. But it really, long-term inflationary risk premium is still priced too low, and the markets are not really thinking about it. But you have to imagine that once economies recover, some inflation is a real risk given the degree of stimulus that we've seen.
But that may be still a long way off. April, thanks so much for joining us. Great to get your take today. April LaRousse is an Insight Investment fixed income investment specialist, and appreciate you joining us. Coming up, shipping forecast. With Brexit trade talks falling apart, we'll look at what no deal could mean for Britain's ports. Mike Sellers joins us, director of Portsmouth International Port. This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open. Right now we are 18 minutes into the session, looking at the stock 600, the broader European benchmark index up 0.8%. A couple of the industry groups that are rising, you can see, or one of the industry groups that is rising is the stock 600 banks index up 1.5%, and S&P futures are up almost 1%. So could be a higher U.S. Open on this Monday morning as well. Sticking with banks, the reporting season in Europe is kicking off this week. UBS reports tomorrow. Barclays is on Friday. This comes after U.S. bank results left investors disappointed. Joining us to discuss is Bloomberg's Danny Berger. So, Danny, what are we going to focus on first off tomorrow for UBS?
Wealth management is definitely going to be one of the big focuses, Matt. We had some positive signs from some of its peers, Julius Baer this morning, Morgan Stanley last week, and Sergio Amati, who's set to step down, gave an interview with the FT over the weekend saying that one of the things he's most proud of at his tenure of UBS is being contrarian and not selling the wealth management division when there were certainly some pressures for him to do so. So obviously this will be important for him in one of the final earnings reports of his time. Trade will also be important, trading figures. UBS is very concentrated in equities, and for the U.S. banks, we saw FICC really be the one that shines, so that could be a bit of a headwind. M&A going to be the other focus here. As recently as 10 days ago, the chairman at UBS, Axel Weber, said that they weren't interested in a, quote, bride. In other words, they weren't looking for M&A targets. He wouldn't comment on speculation over Credit Suisse. So if there will be any sort of hint at M&A for UBS, that will certainly be a focus for their earnings as well.
Danny, thanks very much. Danny Berger with a look ahead to what we can expect from the banking sector. Now, the UK is prepared to water down its law-breaking Brexit legislation. Sources say the government could dilute the controversial bill to try to revive failing talks with the EU. Otherwise, Boris Johnson has said his focus is now on leaving without a trade deal. So what would that mean for Britain's trade and for Britain's ports? Let's talk now to Mike Sellers, Portsmouth International Port Director. Mike, very good to speak to you. I've been looking into some of the background of your port, opened in 1976, I think, so your whole life has been within the EU. To leave without a deal, what is your assessment of what that would do to your business?
Hi. Yeah, you're right. I mean, the port was established in 1976, and actually for two ferry operators for roll-on, roll-off trade with Europe, one of which is Brittany Ferries, and they were looking at getting their fresh produce across to the UK. And they joined and started looking at that just at the point where the UK joined the EEC. So certainly the way the port's developed has been predominantly around EU trade and just-in-time trade as well. So yeah, I mean we've been preparing for whatever the outcome would be, and obviously we've been looking at reasonable worst-case scenario of a no deal. So that's been our focus and has continued to be our focus really over the last couple of years.
So Brexit, obviously a huge issue for you, Mike, but that, I guess, was expected, at least after the vote, and you had years to prepare for it. How has the coronavirus pandemic affected your business? I'm sure much more of a surprise, and I wonder how dramatically it's affected turnover.
Okay, so the first point in your question, in terms of years to prepare, you're right. It has been certainly a focus for us since the since the vote, the referendum. However, it was only until July this year that the government announced something called a border operating model, which really is what the ports will need to work to in terms of when we leave the EU. So despite the referendum being in 2016, it really wasn't until July this year that we've had that clarity, and now we're playing catch up to be prepared for what's going to happen at the end of this year. Whereas our counterparts over in Europe have been clear from day one that the UK will be treated as the rest of the world and have been preparing. So the ports that we deal with have all the infrastructure and have all the systems in place ready for the end of this year. In terms of the coronavirus, we are the third largest international short sea passenger port in the UK. We get on average 2 million passengers that will go through to France and to Spain. And to give you an example, from March through to the end of August this year, compared to March through to the end of August last year, which is our peak season for passengers, we were 1 million passengers less. So it's had quite a significant impact, certainly on our finances and our income. And we're owned by the local authority here, so we're a municipal port, so our profits go to essential council services. So there's a big funding gap because of that lack of income from passengers.
And yes, and so being operating as, with ferries and also with cruise ships and some of the fruit and vegetable import that you do as a business, I can see how that's an issue. We have heard talk in the UK, Mike, around free ports. Is that something that you can use? Are you going to apply for that kind of status?
Yeah, so you know, just to give you an idea, we serve the Western Channel, so we're not the short crossings that you see probably fairly publicly around places like Dover, Calais, and Channel Tunnel, but over in the Western Channel, there's capacity and there's also resilience, Brexit resilience, and that's been recognised by the government. So. Critical freight routes have been protected through, you know, the coronavirus pandemic, and some of those routes are through to Portsmouth. And that was the same when, you know, we were looking at a no deal. And even from January, the government have supported particular routes for the first 6 months to ensure that things like medical supplies and fresh produce comes in through this Western Channel. We also do serve non-EU, and we get you know, various non-EU goods, but predominantly fresh produce, bananas. So in the UK, 50% of the bananas that are consumed in the UK will come through this port. And one of the risks of Brexit is we are also a transshipment hub. So that fresh produce would come into Portsmouth in a container, be loaded into a trailer, and then exported out to France. With you know, with the challenges around Brexit and the potential no deal, you know, shippers are looking at possibly diverting to European hubs. So where free ports come in is free ports would give the protection for ports such as Portsmouth to ensure that we are still that transshipment hub. So we are working with the regional agency here, the local enterprise partnership, to look at a regional free ports bid for the two main South Coast ports, Portsmouth and Southampton, that are here on the Solent.
All right, very interesting stuff, Mike, and obviously you're a man with a lot to do, a lot going on in the ports business. Mike Sellers, thanks so much for your time from Portsmouth International Ports. Up next, we're going to get back to the Brexit conversation with Guntram Wolff, director of the think tank Bruegel. This is Bloomberg.
Welcome back to the European Market Open, half an hour into your trading session, and things looking broadly positive. We seem to be lifted by some renewed optimism around stimulus in the United States. Will that be dashed again at the end of Tuesday, the deadline that Nancy Pelosi has put in place for agreeing stimulus before the election? But so far, that at least is lifting the broad European equity story. Let's get a Bloomberg First Word News update. Here's Laura Wright.
Thanks, Anna. Well, on that stimulus note, there is optimism about progress on a rescue package in Washington. House Speaker Nancy Pelosi says a pre-election deal remains possible, but she set a Tuesday deadline for making more headway with the White House. President Donald Trump is confident he can persuade the GOP to back a good deal, renewing his offer to go beyond the dollar amount that is now on the table. China's economic recovery from the coronavirus pandemic is continuing. GDP grew 4.9% in the third quarter from a year earlier. That's lower than forecast, but faster than the expansion seen in the second quarter. It means China has now regained all the ground it lost in the first half of the year. Industrial output and retail sales both beat forecasts. New Zealand's Prime Minister Jacinda Ardern has won a landslide election victory. Voters returned her Labour Party a majority with its biggest share of the vote in more than 70 years. It's the first outright majority in Parliament since New Zealand introduced proportional representation in 1996. Still, Ardern is weighing leading a coalition government that may include her ally, the Green Party. A ceasefire between Azerbaijan and Armenia has collapsed just hours after coming into effect. It's the second truce brokered by Russia that has failed to stop the violence. Yesterday, the two sides traded accusations of who had violated the agreement. It comes amid the worst fighting in decades over a long-running conflict in the region of Nagorno-Karabakh. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna, Matt.
Laura, thanks very much. Laura right there in London with your First Word News. Now, with talks over the UK's future relationship with the EU on life support, the two chief negotiators, Michel Barnier and David Frost, will today seek a way out of the latest bind. Cabinet Office Minister Michael Gove will also meet with EU officials to discuss Northern Ireland, but Gove said that he is less hopeful than he has been in recent weeks that a deal will be reached.
We hope that the EU will change their position. We're certainly not saying that if they do change their position, that we can't talk to them. But I think it's only fair also that we communicate one other thing, which is that we are ready, if required, to leave on what have been called Australian terms.
This is your weekly Brussels edition guide to politics and regulation. Joining us now is our reporter, Maria Tadeo, on the ground in the EU capital. Maria?
That's right, Matt, and it's Monday morning, and we're going to talk about Brexit, but we are joined by Guntram Wolff, who is director of Bruegel, and I'm sure he's going to make this Monday morning better and easier for us because, well, you know, he knows a lot about this. So, Guntram, I wanted to ask you a question. You know, if you look at where we left this on Friday, where the Prime Minister says, you know, it's clear to me that they don't want an FTA. The EU has given up on this. We have got to be ready to go WTO terms. And then you listen to Emmanuel Macron say, it's you that's leaving. You have to come to us. I wonder, who do you think is going to move first, and when is that going to happen?
Well, Maria, thank you for your kind words, and indeed, it's a great morning, so it's great to be on this show here. Look, I have to say, I'm worried actually at this stage. I mean, accidents can really happen. I still think that the logic on both sides is to, you know, come to the table for Michel Barnier and David Frost to sort out their differences and, you know, to find a way out of this impasse. But I agree with you. I mean, Emmanuel Macron, I think, has really boxed himself into a corner over this fishery issue where I think he's really going a bit too far. I mean, after all, the UK is leaving the EU, and since the UK is leaving, it needs to have a way of saying, well, you know, Brexit has consequences also for you guys. I feel that he is a very sort of strongly boxed himself into this corner. And my feeling is also that many people across Europe, let's say the Netherlands or other countries, aren't very happy with that very strong position that France has taken, including by watering down the European Council statement. So it's not saying we want to intensify the talks, but we just want to continue the talks. So overall, I think really what is needed now is on both sides a little bit of a willingness to look into red lines and see, where could be the compromise.
And I want to pick up on a point that you made on the French president, because on Friday, and this I thought was quite striking, he did repeat about 4 times in a press conference that lasted for just 30 minutes that the UK needs a deal much more than the EU does. This is going to hurt the UK much more than it would hurt the European Union. Do you think he is making perhaps a political miscalculation here, just operating on the basis that we don't have to do much because they really need this more than we do?
Well, look, I mean, the French president is correct. I mean, so Brexit has bigger consequences per capita or per GDP in the UK than it does in the EU as a whole. But that doesn't mean that the EU is sort of immune to a Brexit without a deal. There is certainly specific groups in the UK, in the EU, that will be affected by a hard Brexit. And I have to say, that includes the fishermen in Bretagne in France that won't be able to fish in the British waters anymore. So clearly, and people, business people, small business people in Flanders, the Netherlands, I mean, the north of Europe is relatively exposed, and so I think really if the strategy is to put the access to fishery grounds above everything else, it could fail in the sense that then you wouldn't get neither the access to the fishery grounds nor would your SMEs across Europe have proper access. So I have to say, yes, the UK cost to the UK is bigger than to the EU. But also here there are costs in the EU, and those costs are unevenly distributed, and it would be, I think, stupid to really take that cost if there's no proper reason for it. So I think really it would be a historic mistake if Brexit failed over fishery rights, and fundamentally I don't believe that it will fail. That we will not get a deal because of fishery rights. I mean, this would be just too stupid.
Right. And what about the Prime Minister? What about Boris Johnson? What does he do next? Because I often hear that, if anything, this really has been his own political mistake. He set a deadline that he was not going to be able to comply with, October 15th, and now he's really cornered himself and put himself in a very tricky position. So given everything that's happening, the economic uncertainty, coronavirus, and so on, can he actually walk out without a deal?
Yeah, I mean, you're right. I think the UK Prime Minister has also boxed himself in a bit of a corner. Now, it's okay if it's tactics so that we find a new agreement and a new way of discussing. But, if also for him the same applies. I mean, the economic consequences of no-deal Brexit, especially in the short term, are quite significant also for the UK. And, it will be felt by the little guys, so to speak, right? I mean, by the port authorities, by people, shipping, by the commerce people, by the SMEs in the UK. And so I really think also the British Prime Minister has a responsibility of finding a deal. Politically, I guess I would almost think that given that there's so many years now of this Brexit mess in the UK, that perhaps politically he might be able to just swallow it, and even though people are suffering, he will just put all the blame on Macron.
Well, we'll see. Macron gets all the blame. Thank you so much, Gautam Wolff, Director of Bruegel, for joining us on a Monday morning to talk about Brexit. It's not easy. Anna?
Not easy, Maria. Thanks very much, Maria Tadeo. And Bruegel Director Gautam Wolff there discussing the latest on Brexit. Brexit could feature as part of our next conversation, but there are other matters too. Up next, we're going to be talking, talks are set to resume on whether Greater Manchester will enter the highest level of Britain's COVID restrictions, or England's COVID restrictions, I should say. We'll speak to Jim O'Neill, previously of Goldman Sachs and the UK Treasury, of course, now Vice Chair of the Northern Powerhouse Partnership, with a lot to say on this subject. This is Bloomberg. Welcome back to the European Market Open. 42 minutes into a trading session that actually sees European stocks moving to the upside. The FTSE 100 a little bit more hamstrung than the rest, and that is because of what we're seeing on the pound. The pound actually more, stronger, I should say, than it was just an hour or so ago. Now up by 0.5%, 129.77. So still flirting with that 130 level, dealing with our latest reporting around the possibility of watering down the withdrawal agreement bill to try and get a deal on Brexit with the EU, or part of that conversation at least. Let's turn to other matters, UK and English specifically. Talks are set to resume on whether Greater Manchester will enter the highest level of England's COVID restrictions. The region's mayor, Andy Burnham, said he had a constructive call with Downing Street. That's after the Prime Minister threatened to force Manchester into lockdown. Joining us now is Jim O'Neill, Chatham House Chair, big advocate for the Northern Powerhouse, with a lot to say on the northwest of England often. Jim, great to speak to you. Give us your thoughts on where you think this is heading then in the short term. I'm sure you're watching very closely what we're hearing from Andy Burnham, the mayor, and also what's coming out of Number 10.
Well, it sounds to me as though there's a stronger chance of some kind of agreement later today. On domestic British media, there's been a round going with the minister responsible for local policies just in the past 20 minutes, and sounds to me like the mood of talks that took place yesterday must be a bit better. But in essence, the government's going to be providing more money to Manchester to help them cope with any potential loss of employment for people in businesses that they close down. And I think, personally, I think Manchester's been right to push for it. And it's caused a problem for the government yet again, on top of all the others they have, because, of course, so-called Northern Powerhouse and levelling up is in theory a centrepiece of their agenda, and they've somehow put themselves in a position where, as with other things during the summer and autumn, they appear to be actually going in the opposite direction. So politically, it has not looked at all good for the government, this mess.
It doesn't look good for them at all, Jim. And, of course, we should expect politicians to fulfill their campaign promises. But right now, it looks like their hands are tied a bit by, when I just look at debt to GDP and the Moody's downgrade, can England still afford to fulfill those promises made by Boris Johnson?
Well, these are minuscule. The numbers specifically on a deal for this are minuscule. The number of people that work in the hospital or the pub sector in particular on a regional basis are tiny compared to the amount of money that's being spent overall by the UK on the pandemic, which is why I've personally been in a lot of media the past few days about it. I don't understand why they managed to get themselves into such a silly situation, because the amounts that they have to increase to do a deal are literally tiny compared to the amounts of money that they're being spent in recent months. And to the rating agencies, it would be a little speck on the table of the data. So in the broader picture, of course, the UK has got a problem, along with many other countries, of having had to spend a huge amount of money. But in this particular incident, we're talking about a small amount of money.
You've had an alternative approach, Jim. You've talked about an alternative approach about guaranteeing revenue for businesses. We previously, of course, have been, the Treasury has designed plans that are all about furlough and paying a percentage of salaries. Is it too late for a pivot to a new way of doing things? Would that be sensible at this point?
I mean, this whole mess with Manchester has resurrected an idea that I've discussed on your programme back in March and elsewhere, and I talked about it in the Lords, which got a lot of attention. That I really don't think the whole loan scheme that the UK embarked on was particularly sensible. They've sort of treated business and employees as separate areas ever since this started, and it's just costing the UK more money than otherwise would be the case, and it's causing so many different tensions that might not otherwise have been there. In reality, Anna, I think the deal that probably will be reached today will be some version towards what I've said. I think what they are probably going to offer Manchester is some kind of pot of money where they can compensate the businesses that may temporarily have to close to stop them going bust. I don't know what they'll call it, but I suspect that's now going to be part of the deal. And I hope so, because it makes a lot of sense.
If you look, I mean, on the more macro level, Jim, what do you expect to happen? We've saddled, it looks like to me, we've saddled consumers and a lot of businesses with debt at a time when they weren't taking in any revenue. That seems like a recipe for disaster. They come out the other end of this, and they'll never be able to dig themselves out of that hole. Is there some kind of debt forgiveness that's going to be necessary? I mean, even globally?
To be honest, despite the tone of everything I've just said and some of the many mishaps of UK policy, slightly peculiarly, maybe oddly, I actually think the world economy is continuing to show a pretty decent recovery from this mess. You know, a few hours ago, we had the latest Chinese numbers, which obviously are really important in themselves because China is so big for the world. China's clearly experiencing a V-shaped recovery. But because China was into all and out of this earlier than everybody else, it sort of does show you what could, in theory, happen elsewhere. And according to some of my beliefs and hopes, I think we're getting very close to news of a stage 3 vaccine result for one of the leading candidates. And if they go as the way the general talk has been, and there's 2 or 3 of them that will come in weeks after, I think by the first quarter, notwithstanding all this serious longer-term challenge of debt, economic growth will accelerate significantly all over the place because the sectors which have not been able to participate at all could start to reopen with the use of a vaccine. So I think over the next 6 months, what I'm really saying is I think these debt issues aren't something to worry about. Beyond 2021 and throughout much of the rest of the first part of the decade, yeah, these are huge issues and somebody's going to have to pay for them. And we're going to have repeated concerns about the sustainability of long-term growth, the quality of long-term growth, perhaps even taxes and equality and maybe even a bit of inflation. But I don't think these things are relevant for the next few months myself.
So that's the global picture. That's the optimism, I suppose, Jim, that many cling to. Back to my doorstep, to your doorstep, and where we started the conversation. People often say that pandemics speed up change or speed up fault lines that were already emerging. Many people asking about what this does to the UK politically as an entity. What about English devolution? Do you think that the virus will speed us up in that direction?
Well, I hope so. I heard your intro to me. I obviously went into government briefly. Well, it's 4 years ago since I left now, but I was there to push the Northern Powerhouse agenda and devolution. And I became a passionate believer of more economic devolution in the UK. We're one of the most ridiculously centralized countries.
Good morning, everybody. As you can see, I closed my short position on euro. As you can see, we was holding from 117.44 position. So we closed at 117.24. Sorry, this is not 34. And we have a profit, £2,000 on from these positions. Yep.
Kino, who leads our Markets Live team in Europe. This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open. Right now, we are 53 minutes into the session and looking at gains on the continent, slightly stronger than those that we see in the city. Right now, FTSE is up 33 basis points, or 0.3%. The DAX is up 0.5%, and the CAC 40 in Paris is up 0.8%. Joining us now is Christine Aquino, who leads the Markets Live team in Europe. And Christine, can we see from these gains that investors are more sanguine about the COVID lockdown issues and also about the possibility of a solution for Brexit?
Yeah, I think, Matt, that it's probably not so much a sanguine sort of feeling, but rather a bit of consolidation here and a give back of some of the declines that we saw last week. I mean, remember, Thursday was really a sharp decline for European stocks and across the market landscape in Europe. Really, it was really a big risk-off move, and so it would be sensible for some assets to start the week off in a more upbeat tone, just to give back some of those declines. But it's still very much, the virus story and the widening lockdowns, or the prospect of widening lockdowns in Europe is still very much front and center. And I wouldn't be surprised if we see another knee-jerk reaction lower if we get more on that front, especially if we get news of more cities either doing more restrictions, or the cities already with restrictions making those even more stringent.
Christine, I know that you've been talking a lot about the possibility of fiscal stimulus, of course, and what's going to happen in the US on that front. Just briefly, the latest there, how that's moving markets.
Yeah, I think the hope still remains, and the base case is for after-election stimulus. And so if we get any kind of surprise, that would certainly be positive. It'd be an October surprise on the more positive front for markets, I would think, Anna.
Christine, thanks so much. Thanks for joining us. Christine Aquino, who leads our Markets Live team here in Europe. IB plus TV Go is the function to use on your Bloomberg if you want to get involved in the question of the day, Matt, and talk to us here at Bloomberg. Matt having a coughing fit over there in Berlin. So I'll take us out of the show.
It's a sneeze. It was a sneeze. I wasn't coughing. Don't worry. I wasn't coughing.
No, I didn't say the coughing word. I didn't mean to say the coughing word. That's it for Matt Miller and I. We're heading to Bloomberg Radio, where you can join us. Up next is Surveillance.
China's economic recovery from the depths of the COVID crisis continues. Third quarter GDP rose 4.9%, missing expectations, but faster than the expansion seen in the second quarter. Restrictions tighten as virus cases surge around Europe. Italy is the latest government to add lockdown measures, but prioritizes its struggling economy. And shifting the deadline, Nancy Pelosi sets a Tuesday time limit for more progress on U.S. fiscal stimulus if the president wants a deal before the election. Well, good morning, everyone, and welcome to Bloomberg Surveillance. Happy Monday. I'm Francine Lacqua here in London. This is what the market is looking at. Now, again, a very busy week onto the U.S. election in about 16 or 17 days from now. I'm looking at stocks and also futures rising. This is on hope that we will get a stimulus. And then I'm looking at treasuries. They're pretty much dipping. The pound also edging up after reports that officials were prepared to water down controversial Brexit legislation in a move that could revive failing talks with the European Union. Also looking at yuan pairing gains and Chinese stocks slipping. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Good morning, Francine. There is optimism about progress on a rescue package in Washington. House Speaker Nancy Pelosi says a pre-election deal remains possible, but she has set a Tuesday deadline for making more headway with the White House. President Donald Trump is confident he can persuade the Republicans to back a good deal, renewing his offer to go beyond the dollar amount that is now on the table. Now, China has passed a new law to restrict sensitive exports to protect national security. It provides a framework for Beijing to fight back against the U.S. amid tensions over high-tech industries. Its control list is much slimmer than the one used by Washington, but it could be expanded. The U.S. has recently taken action against Huawei, TikTok, Tencent, and Schmick. New Zealand's Prime Minister Jacinda Ardern has won a landslide election victory. Voters returned her Labour Party with a majority, with its biggest share of the vote in more than 70 years. It's the first outright majority in Parliament since New Zealand introduced proportional representation back in 1996. Still, Ardern is weighing leading a coalition government that may include her ally, the Green Party. And a ceasefire between Azerbaijan and Armenia has collapsed just hours after coming into effect. It's a second truce brokered by Russia that has failed to stop the violence. Yesterday, the two sides traded accusations of who had violated the agreement. It comes amid the worst fighting in decades over a long-running conflict in the region of Nagorno-Karabakh. Global news 24 hours a day, on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, global coronavirus cases are approaching the 40 million mark. Infections are sweeping across Europe, and cases in India and the U.S. are averaging more than 50,000 a day. Over in the U.S., House Speaker Nancy Pelosi has set a Tuesday deadline for more progress with the White House on a stimulus deal before the election. That, as President Trump says he's willing to offer more than $1.8 trillion amount that Republicans have put forward. Meanwhile, China's recovery from the depths of the pandemic also continues. The headline GDP number actually came in short of expectations at 4.9%, but growth did accelerate in the third quarter, while retail sales and industrial production both beat forecasts. Well, joining us to discuss all of this morning, Geraldine Sundstrom, portfolio manager at PIMCO. Geraldine, there are a million stories that we're watching out for. There's the U.S. election. There's, of course, what's going on with China. There's these extra restrictions stopping short of a lockdown. What is the market pricing in?
Well, I think the market, to some extent, is willing to look through this noise. In particular, they want a smooth transition or Trump to remain in the election. They think that the stimulus might come before the election or it will come after. It's not a question of if, but really a question of when. So I think so long as the pandemic is being managed by a government, meaning that it's sort of reduced mobility, but the economic activity is still ongoing, I think people will focus on 2021 and the recovery that's ahead of us. So I think markets are remaining cautious, but not entirely depressed by what's happening right here, right now.
Geraldine, is the market pricing in a Joe Biden win, and how does that affect actually your world of investment?
I think increasingly we can see it maybe on the sort of sub-component in the market that a blue wave might be getting priced into the market. But I think increasingly the market has moved away from the rhetoric of Trump versus Biden and what it could mean in the medium term. For now, what it will mean, I would say, is first and foremost, we're going to get a sizable stimulus package. The consumer in the US is in a good position. There's a lot of excess saving that are waiting to be spent. Pent-up demand is high. We saw retail sales for September were still robust. So I think the market is going to first focus on this, the recovery. Then the shape of the recovery might be a little bit different if it's a Biden or a Trump, but ultimately remains a recovery. The question of, potential tax increase or things down the line are for much later now.
Yeah, Geraldine, I just need to bring the attention of our viewers and listeners to that latest headline coming on the Bloomberg terminal saying that Euronext has cited a technical issue, and so therefore every trading has been halted in all of the products. So if you're looking at live pricing, just be careful, because it's very likely that if it is through Euronext, because of this technical issue, we don't know the depth of that technical issue yet, but trading for the moment has been halted in all products. So this is important, and I will bring you, of course, up to date when we know more, either about the technical default or when we know this technicality has been fixed. Going back to the markets and to Geraldine Sundstrom from PIMCO. Geraldine, the other big surprise was China. I guess a bit less good than expected, but still growth of 4.9%. What does it mean for how much exposure you want to China?
I think China is an incredibly important driver of growth globally and will remain so, and it's likely to increase going forward. Of course, they are entangled with this big rivalry with the US, but if anything, it has increased the resolve of the government to push forward on all sorts of domestic development, like pushing forward with 5G network development, pushing with smart cities, IoT, and all these things. So it's likely that China's growth is going to remain supported going into 2021. I think the 5-year plan, where we are likely to see a few details in the weeks to come, is going to be centered. And I think that China is going to use these climate targets on the secular horizon to really bring domestic growth and power ahead. And a lot of the things which are necessary for this development are, of course, made in China. So I think China has pivoted a little bit more inward and using, I would say, all these reforms and targets ahead to really push forward and continue growing. And the very good news that we got as well that was not in the September data was the consumer and what they did during the Golden Week holidays that took place in October. And there again, things were robust. So it goes to show that if you manage to keep the pandemic under a lid, that economic activity can rebound forcefully.
Geraldine, thank you so much. Geraldine Sundstrom there from PIMCO stays with us. Now, breaking news over the last couple of minutes, Euronext trading has halted in France, Portugal, and other countries. This is, we understand, because of a technical fault. So we'll bring you, of course, any breaking news as when we know that this technical fault is fixed. And, of course, some of their products will be reopened. But for the moment, don't look at any of the trading coming from Euronext, because stocks in France, Belgium, Portugal, Netherlands, and others are halted today. Coming up, we'll have plenty more with Geraldine Sundstrom. We'll talk, of course, about the President Lagarde in an interview with Le Monde, and Bund rally. Will that Bund rally continuing its momentum in the coming weeks, possibly, as investors taking note of more aggressive ECB messaging? We'll have plenty more on that next. This is Bloomberg.
it is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, over the last 15 minutes or so, we were told that Euronext is having a big technical difficulty, which means that some of the stocks are actually halted. This is true for example, well, actually all the Euronext stocks. So France, Portugal, and other countries means they, at the moment, don't have stocks trading. This means that the likes of LVMH, Casino, L'Oreal are amongst those whose stocks were actually halted. We are trying to reach a spokesperson for Euronext in Paris. At the moment, we don't have an update, but as soon as we do about when these stocks will reopen, of course, we'll bring you the very latest. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Philip says the lingering impact of the coronavirus will boost demand for its medical gear in the coming years. It has seen particularly heightened demand for its ventilators. The Dutch maker of diagnostic tools and toothbrushes has seen a 32% jump in earnings in the quarter. The company's CEO says he expects a modest sales gain in 2020.
As COVID rears its head in the fourth quarter, it's a bit uncertain, but we are pretty confident that we can deliver positive growth for the year on the back of a strong order book and continued deliveries of acute care equipment and telehealth services.
Danone says it is planning to sell assets and shake up management to revive sales at the yogurt maker. The company is putting businesses worth 500 million euros up for sale. It's shifting its management to be more focused on geography than on product groups. Danone's finance chief is also now leaving the business. And a new deal for one of the world's largest alternative asset managers. Brookfield is buying an almost 20% stake in American Equity at a 15% premium on Friday's close. American Equity confirmed the move, rejecting a proposed $3 billion takeover from Athene and Massachusetts Mutual Life. And that's your Bloomberg Business Flash. Francine.
Thank you so much, Leanne. Now, EU leaders should consider whether the region's 750 billion euro recovery fund should be made a permanent tool. That's according to the ECB president, Christine Lagarde, who said she hopes there will be a debate about a common budgetary tool for the euro area. Well, still with us is Geraldine Sundstrom from PIMCO. Geraldine, first of all, the messaging from the ECB in general through this interview in Le Monde, what does it actually mean for German bonds? What does it mean for Italian BTPs?
Well, I think that the ECB really has handed over the job to the fiscal package and governments, therefore. So it's becoming more into the sphere of fiscal dominance and politics rather than monetary policy like we've known all these years. Of course, the ECB will be very important in sort of smoothing this, because governments and EU entities will have to issue a lot of debt to finance those recovery package. And I think in a way the pandemic gave the perfect excuse, and I think that should be welcome, to create this pan-European recovery. I think is going to be around climate and the climate targets that have been issued by the Commission and that have also been voted by the MEPs in Strasbourg. And there will be big programs that will be pan-European, that will be funded. And these are going to be with us for years and years to come. I mean, most of these targets have been set for 2050. A lot needs to be done in terms of renewable energy, in terms of renovation of buildings. And I think in a way, Christine Lagarde is hinting towards this, is that to hit those collective targets, this type of package will have to be in place for, I would say, decades to come. And that probably brings the perfect excuse for it.
Geraldine, what does it mean for where you see value? So what are you buying right now in this kind of environment?
So I think this is bringing thematic into our portfolio in what I call the cyclicality 2.0. We are early in a cycle of recovery with a lot of support from governments, and they have written it on the wall for us of where a lot of this money is going to be channeled is going to be channeled towards renewable energy, towards electric vehicle, electrification, towards renovation. So these are sectors that are likely to be very well supported for years to come. And in terms of portfolio exposure and thematic exposure, these are areas where we are focusing more. So it's a little bit different from the traditional cyclical stock that we would be buying at this juncture in the cycle. It's a little bit of a nuance in what I call the cyclicality 2.0. And I think there's a lot of growth that is going to come and a lot of exciting investment to be made.
Geraldine, if you look at the market right now, do you also make a difference country by country because of lockdowns, or actually do you go for the longer term thematics that you were just talking about?
I think there's a longer term thematic, even though they're going to play out over many years. Markets are already starting to price this, and it is on the move. It's not so much regional, I would say. Yes, GDP growth might be better in Europe thanks to this recovery package. But what we're doing is really genuinely follow the money and see which are the companies that are going to be the enabler of this green and digital recovery, which companies are going to accrue the benefits and the P&L. And when we scan for those companies, we find a few in Europe, but I have to say that the vast majority of the companies are in Asia, in China, in Taiwan, in South Korea, but also in Japan. So our portfolio approach from a regional standpoint doesn't really look at where the money is going to be spent, but who is going to be the enabler of this recovery and who is going to accrue the benefit.
Geraldine, thank you so much. Geraldine Soenstrom, their portfolio manager at PIMCO. Now, we're also finding out, of course, a little bit more on this technical issues that Euronext is having. What we know so far is that stocks have still not opened, or at least they were halted in terms of trading. So Euronext says all trading has been halted because of this technical issue. This means stocks in France, Belgium, Portugal, and Netherlands have been halted, and that of course includes big stocks such as L'Oréal or LVMH. We're trying to get to the bottom of it, as I'm sure Euronext is, and we'll bring you, of course, any breaking news that we had on the fact that Euronext says trading has been halted in all products because of a technical issue. Coming up, the UK is said to be preparing to water down its law-breaking Brexit legislation. Could that boost dwindling investor confidence that a trade deal could happen? We discuss that next. This is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, the UK is prepared to water down its law-breaking Brexit legislation. Sources say the government could dilute the controversial bill to revive failing talks with the EU. Now, at the end of last week, Boris Johnson said the UK would focus on preparations to leave the EU single market without a trade deal, but he also said that talks remain possible if the bloc changes its stance. Well, let's get the latest with our Brexit editor, Edward Evans. Ed, great to get you on to try and understand what exactly is going on. Are the talks on? Are they off? Could they be back on? Like, what's going on?
They could certainly be back on, but for now we're in a holding pattern. Boris Johnson on Friday said we should prepare for essentially a no-deal Brexit at the end of the year. But crucially, he did leave the door open for further talks as long as the EU came back with what he called a fundamental change of approach. What does that actually mean? Well, it seems it's going to be about three things. One, the EU agreeing to intensify the talks. That's something actually the European Commission President von der Leyen indicated they would actually on Friday. Two, that the EU will be prepared to compromise. And again, significantly on Friday, Angela Merkel said after the summit of EU leaders that the EU should be ready to compromise. And three, that both sides are prepared to work on the legal text of any agreement. Now, there's three things, two of which the EU certainly moving on, and the last they certainly could move on. So it is quite possible that they could get back to talks. And in fact, Michel Barnier and David Frost, the two sides' chief negotiators, will be having a telephone conversation today. It may be a few days now before talks actually resume.
Ed, I mean, how much of this is a negotiating tactic? I don't know how difficult it is to actually make a bet on whether it's a 50-50 chance that we get an agreement, or it could be much less or much lower. Like, what needs to happen for these starts to get back on track?
I think what you need to see is some move from the European Union. I think what was absolutely striking on Friday was the pound was basically unchanged by this, which suggests, given the consequences of no deal, that investors really do see this as a negotiating tactic, and that they expect talks to come back on. Now, there is a hard deadline in this. Don't forget the transition period ends at the end of this year, and you do need a couple of months to actually implement and ratify any agreement. So that really puts the deadline here at the end of October, early November. So this is, it looks like a negotiating strategy, but it's one without a safety net, and we're getting awfully close now to hitting the ground, as it were.
Thank you so much, Ed Evans, there with the very latest, of course, on Brexit. We'll have plenty more on Brexit throughout the day. Now, this is what we're also seeing on Euronext. Euronext, in the last couple of, I think, about 25 minutes, actually came out saying that there were some technical difficulties. And because of the technical difficulties, the stocks have been halted. So this is what we know so far on, of course, everything that's going on with Euronext. So Euronext is still just saying that the trading has been halted in all products because of a technical issue, and it means, for example, that trading, will not open until further notice. Again, this is according to a technical issue. Euronext cash markets, but also the derivatives markets have been impacted, and Euronext is just reiterating that it's working to resolve the issue and will provide an update as soon as possible regarding the expected pre-opening time and resumption of trading. Of course, as soon as they let us know, we'll let you know. Now, coming up, it's the only major economy to grow this year. Retail sales and industrial production in China both gain momentum in September. We'll focus on the world's second biggest economy next. This is Bloomberg. another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Good morning, Francine. Sources tell Bloomberg the UK government is ready to water down its controversial law-breaking Brexit bill. It wants to revive failing talks with the EU as the transition period draws to a close. One obstacle in negotiations is rebuilding trust. It was badly damaged by the internal market bill, which rewrites part of the Brexit withdrawal deal already agreed with the European Union. Now, Twitter has blocked a tweet from one of President Donald Trump's health advisors. Scott Atlas, known for his contrarian medical views, tweeted, "Masks work? ? No," linking to an article arguing against the effectiveness of face coverings. Twitter has told CNN it violated the company's rules on sharing false and harmful information. Now, OPEC Plus officials are meeting today to discuss the state of the market. While no supply decisions are expected until a meeting in December, Russia and Saudi Arabia are already stepping up diplomacy. President Vladimir Putin and Crown Prince Mohammed bin Salman have spoken twice by phone in a week. They discussed a further cooperation to stabilize the oil market. And people gathered in Paris yesterday to pay tribute to a history teacher killed near the city on Friday. Crowds met in the Place de la République to hold a moment's silence. Samuel Paty was attacked after showing cartoons of the Prophet Muhammad in a class about freedom of expression. His attacker was shot dead by police, and authorities say they have now detained an 11th person. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now let's focus on the only major global economy set to grow this year. China's GDP data misses estimates in the third quarter, but retail sales and industrial production both gained momentum in September. Our Tom McKenzie reports from the warehouse of e-commerce giant JD.com in Beijing.
China's third quarter GDP coming in below estimates. The number was 4.9%. The forecast had been for 5.5%. But the economists we've been speaking to suggest that maybe you should look away from the third quarter GDP number, focus instead on the monthly activity data, particularly retail sales. You saw an expansion there in September of 3.3%, well above the estimates, well above what you saw in August. It's one reason why we're here at this fulfillment center south of Beijing, run by the e-commerce giant JD.com. They say that they're seeing, in terms of weekly orders, growth of about 10% compared to 2019. The consumer appears to be stepping up here in China after being on the sidelines, and the economists suggest that that will lead to a more broad-based economic recovery going forward. Industrial production, by the way, also solid, as was fixed asset investment. In terms of the risks, the export part of the economy has been doing very well on the back of demand for work-from-home electronics for Europe and the US, also medical supplies. Question marks as to whether that will continue as the virus continues to hold its grip in those parts of the world. And then, of course, the ever-present challenge of US-China tensions and the question of leverage, something that officials here pointed to as a potential concern over the weekend. In Beijing, Tom McKenzie, Bloomberg.
Our Tom McKenzie there. Now joining us is Phoenix Kalin, Emerging Market Strategy Director at Societe Generale. Phoenix, great to have you on the program. When you look at China, the growth numbers from China, will it be much easier for them to change an economy just because it's growing when the rest of the world isn't?
Well, I think it certainly is the standard bearer for growth versus the rest of the global economy, and it's that spark of positivity in markets at this point. And I think it's important to highlight, of course, that even though it was a miss, we are seeing a more balanced growth, a higher quality growth, because it's now led not just by investment activity from infrastructure stimulus, but also by consumption and services. Those are coming back online. And so it's an underlying improvement in consumer confidence that we're very happy to see. And I think this can normalize over the coming quarters. And I think that can lead the way for global growth to rebound as well. As, of course, we're seeing a recovery in import demand in China, and that bodes very well for commodity exporters in emerging markets.
Phoenix, is there a danger that if the rest of the world really slows down, then of course China will be adversely hit, and economists aren't really realizing? Even if you look at the world IMF World Economic Outlook, China was doing so much better than others, but then because they export so much to the rest of the world, if there's lockdowns, if there's restrictions, China will also suffer.
Yeah, I guess for me, the inward channels into China are less important than the outward channels coming out of China, because of how resilient it has been in tackling this pandemic. And when at least on that front, and when we see the resilience of the underlying recovery, then I think that bodes well, of course, for how it manifests itself into the rest of the world. So I think those outward channels are probably, I would emphasize them more.
What's the biggest challenge for the Chinese economy right now and for Chinese politicians?
Well, I guess it's to, of course, try to retain control over this pandemic, try to encourage credit growth, try to encourage more confidence in the consumers, as we're starting to see happen. So I think it's about, bringing back this kind of broad-based, not just export-led or investment-led, but wider consumption-based model as well. And of course, try to retain all the various deleveraging metrics that they have been focused on. So I think it's a two-step approach where it's focused on not just controlling the pandemic, but trying to encourage broad-based growth.
Does renminbi, Phoenix, stay strong in all of this? And does it actually, is it the newfound engine to kind of spur on some of the other Asian markets?
Yeah, I think it is. And certainly when we look at the forecast out over the next 12 months, we do expect for the Asian currency complex to benefit very much from China's recovery, and for that to lead the other regions. So we expect for Asian currencies to do the best over the coming year versus LATAM or CEMEA currencies.
How does the currency, but also the economy, Phoenix, move depending on who gets the White House November 3rd?
Well, so we did an analysis on this a couple of weeks ago, and what we found was, one, it didn't matter whether it was Democrats or Republicans coming into the White House. What mattered was whether it's the incumbent or the challenger. And if it's a challenger, and particularly if it's accompanied by a sweep of Congress, then that tends to be quite negative for emerging market currencies. So we would expect in this case, if Biden does win the White House with a blue sweep, then that might result in temporary EM currency weakness, as it brings into question a lot of the policy changes that Biden might implement, and just the uncertainty around those policy changes over a temporary period.
Thank you so much. Phoenix Callender from Societe Generale stays with us, so we'll have plenty more from Phoenix, and we'll talk a lot more about also some of the oil-rich countries in the emerging market space. Now, another thing we're watching out for is Euronext. So Euronext has said that all trading has been halted because of a technical fault. We'll bring you the latest when we have an opening time or when we understand more about what the technical issue is. So for the moment, Euronext stating that all stocks and derivatives on Euronext markets have been halted because of technical issues. Coming up, oil steady ahead of today's JMC meeting to assess the state of the market. We'll discuss that next, and this is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Jack Ma's Ant Group has won a key approval from Chinese regulators for its listing in Hong Kong. Sources tell Bloomberg officials gave the green light for Ant to seek a listing hearing with the Hong Kong Exchange as soon as today. Ant already had the nod for its Shanghai listing. It paves the way for what could be the biggest initial public offering ever. Now, Crown Resorts says it's been investigating for a potential breach of anti-money laundering and counter-terrorism financing rules. Australia's regulator has started an enforcement probe at its flagship Melbourne casino. Concerns are focused on how the casino handles individuals deemed to be high risk and politically exposed. And Alibaba is investing about $3.6 billion to take control of one of China's largest hypermarkets. It's doubling its stake in Sun Art Retail with a plan to buy out the rest of the company. The move is to try and fend off rivals like JD.com in e-commerce's hottest growth area. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Now, OPEC Plus is facing growing pressure to change course as a resurgent pandemic threatens demand once again. The group meets today to review compliance with production cuts and, of course, assess the outlook. Well, joining us now is Bloomberg's executive editor for energy and commodity. He is Will Kennedy. Will, thank you for bringing us your insights into surveillance. What exactly are we looking for? Will they have to cut production to make sure that prices stabilize?
So the question that's coming up for debate now, and we won't get a decision necessarily today, it's more for the full meeting at the beginning of December, but under the current terms of their deal, they're meant to put 2 million barrels of extra oil into the market in January, and there's a real question about whether the market, which has been relatively stable at around $40 a barrel for the last few months, whether the market can take that extra oil. There's a suspicion that it can't, that the resurgence in virus cases in Europe means that demand was going to be subdued. We've got more supply coming out of Libya as things repair themselves there. So that's what they're talking about, whether they're to hold off on that extra oil in January. And we think that's what MBS and Putin were just talking about over the weekend.
And Will, this would be despite actually China not doing too badly. So could China alone, if they continue growing at 4.9%, absorb some of this oil consumption?
Absolutely, Francine. They are absorbing a lot of oil consumption. It's been a real bright spot. We're seeing both demand for oil and crude imports hit record highs in recent months as the economy recovers and Chinese drivers get back on the roads and get back on the roads more perhaps than they were because they're avoiding still public transit. So that's happening. One interesting other country to watch is India, where we've seen a real improvement despite the very bad coronavirus outbreak there. A real improvement in demand as people just get back to normal despite the virus. So in Asia, there are bright spots, but I think that means a lot of concern about demand both in Europe and the US. So it's quite a nuanced picture as you look at different parts of the world.
Well, thank you so much. Bloomberg's executive editor for energy and commodities there, Will Kennedy. Now, still with us, Phoenix Kalin from Societe Generale. Phoenix, how much do some of the emerging markets that you follow, of course, depend on the price of oil?
Yeah, certainly a lot of the commodity-sensitive emerging markets will be very dependent on this. We have lots of major ones within emerging markets, of course, prominent ones in LATAM. And so it's quite important to the growth outlook and the overall recovery of the economy and the export base for there to be stable and improving oil prices.
Phoenix, overall, do you worry about inflationary pressures coming because of the stimulus onto emerging markets, or emerging markets have a better chance of getting through this quicker?
We certainly do worry about the impact of stimulus packages on inflation with inflation expectations so low at this point, and with the expectations for the growth recovery so low. I think it doesn't take a lot for expectations to change and for this to be reflected in possibly steeper rates curves and steeper bond curves across EM. And hence we are positioned for various curve steepening trades across the various regions. And on average, we would expect for 10-year government bonds across EM to rise about 40 basis points over the next year on the back of those implications from higher inflation and higher growth expectations.
What's your take on some of the emerging market currencies, Phoenix? Which one's your favorite?
So I think at this point, ruble is oversold and it's got a lot of geopolitical risks priced in. We would look for ruble to strengthen possibly after the U.S. elections is over, after the uncertainties around what the administration's stance will be toward Russia is clearer and more understood. So I think ruble is one that stands to recover because it's I think fundamentally undervalued and oversold at this point. I think CEE currencies as well, they tend to benefit from the European recovery and the stimulus packages, the recovery packages. And so I think that can be one of the sources of outperforming currencies over the year. And of course, Asian currencies. We do like, the Asian currency complex and how that benefits from China.
Phoenix, are we going to see a trade actually being redeveloped a little bit? So instead of US-China, will it be China and some of the emerging markets that are closer to it?
Yeah, I think that will continue to be a long-term trend, as we've seen this kind of move away from reliance on very bilateral relationships into China broadening its portfolio base. I think that will continue to of course, improve the prospects for relationships to develop between emerging markets and China, between South Africa, between Turkey, between Russia and China. Those will continue to strengthen over time.
Phoenix, thank you so much. Phoenix Kaelander, Emerging Market Strategy Director at Societe Generale. Now, coming up, the final countdown. There's just 2 weeks until the U.S. elections. We'll bring you up to speed with the very latest next. This is Bloomberg.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
If you vote for Biden, He will surrender your jobs to China. He will surrender your future to the virus. He's going to lock down. This guy wants to lock down. He'll listen to the scientists. If I listened totally to the scientists, we would right now have a country that would be in a massive depression. Instead of, we're like a rocket ship. Take a look at the numbers.
And experts have said, and have been saying for the last month and a half, that nearly another 200,000 lives are likely to be lost in the coming months between now and the first of the year. If we continue to refuse to follow science, because he refused to embracing wearing a mask. How many times on television see him make fun of Biden wearing a mask?
I love the Republicans, and we have some great, but they have to learn to stick together better. You know, we have some stupid people.
Folks, I mean it when I say this. It's time to restore America's soul. It's time to rebuild the backbone of America, the middle class, and this time bring everybody along, no matter your race, your age, your religion, your gender, ethnicity, or disability. We can do this.
Well, that was President Trump and his Democratic rival Joe Biden hitting the campaign trail this weekend with different messages on the pandemic. There's just 15 days to go until the election, and millions of Americans have already voted. Well, let's get back to the markets. We also saw some extraordinary monetary policy moves during the pandemic, and those have motivated investors to find new opportunities and strategies for mitigating risk. Well, we spoke exclusively with Dwight Scott, the global head of Blackstone's investment management unit, GSO.
Well, I worry about the fact that rates are so low today that the wind that's been at our back as investors for a long, long time of falling rates, we don't have that in the credit markets. Now, investment grade is inside of 2%. So you're getting duration risk. So you're making long-term investment decisions, and you really don't today know how long rates are going to stay this low. So I worry that as you see rates start to tick back up, which I don't think is going to happen in the real near term, but over time, as those rates tick back up, those fixed income exposures, you're going to have to be really careful about, because you're not getting a lot of yield to offset an increase or a decrease in pricing caused by an increase in rate. So I'm cautious about that.
How does that change the way you underwrite your expectations here?
Well, once again, it gets us back to this difference between the private world and the public world. On our public strategies, we are definitely moving higher in the value chain. We want better companies, better management, strong sponsors in our leveraged loan business, because we believe those businesses will outperform and they'll grow into their capital structures or grow into less leverage. So that's how we're managing that on our levered loan side, for instance. On our private side, we're able to kind of jump in there and take advantage of dislocation. So if a company is coming to the market, if a sponsor, a private equity firm, wants to buy a public company, they can't really finance that in the bank markets because they need full committed capital. So we can step in there and provide significant capital. We did that for a large chemical acquisition in Europe this year, where we provided half of the financing they needed before they made their bid, and then they went out and placed the rest of it later. And so I think those kind of situations in this kind of market will be where we are more aggressive.
It's funny, I was about to just ask you, in the heat of the pandemic, what kinds of risks you're not worth taking, but you just pointed to an opportunity there. It's worth asking you then, what opportunities are you seeing to put money to work? What looks like the most investable opportunities?
Well, I do. We are seeing, I want to be careful because we are being cautious. We've been talking to our investors about this concept of cautiously active for the last 6 months. And what we've described that as, we are worried about where this pandemic leads. We don't really have great insight into when we'll be back in theaters or we'll be back on airlines. And so we've been cautious about that, but we've been active because the higher quality names traded off with the lower quality names, and we were able to invest in those, and the private market shut down and began to reopen, and we were able to invest in that. And so we believe that there's always going to be an opportunity. I'll give you an example. We did across Blackstone, so in the credit business, in our life sciences business, in some of our other businesses, we provided $2 billion to this company called Alnylam this year in the middle of the crisis in the form of a royalty, in the form of a loan, in the form of some equity. And that $2 billion was critical to that company to push through this cycle and to grow. And so I think we'll always see those opportunities, and we'll try to make sure we use the value of our platform, the scale, the broad nature of our products, because those things will give us those one-off, take a shot and do something really important in these markets. At the same time, we'll continue to make the investments in the public side of our business.
Dwight Scott there, the global head of Blackstone's investment management unit, GSO. Now, Euronext, we've been telling you for the last hour, Euronext, of course, has traded has halted trading its stocks and derivatives. This is because of a technical difficulty. So we'll see when they reopen. Any news that they give us, we'll give to you straight away. This is Bloomberg.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
Continues. Third quarter GDP rises 4.9%, missing expectations, but faster than expansion seen in the second quarter. Restrictions tighten as virus cases surge around Europe. Italy is the latest government to add lockdown measures, but still prioritizes its struggling economy. And shifting the deadline, Nancy Pelosi sets a Tuesday time limit for more progress on U.S. fiscal stimulus if the president wants a deal before the election. Well, good morning, everyone, and happy Monday. This is Bloomberg Surveillance. I'm Francine Lacqua in London, Tom Keene in New York. Tom, the other big story here in Europe is, of course, Euronext. Because of a technical glitch, we don't know much more than that. But because of that, because of a technical fault, stocks but also derivatives are actually not trading in most of the European markets where Euronext is present, apart from Oslo, I understand. Oslo not affected. Portugal, the Netherlands, Ireland, Belgium, and France are.
Well, the correlate, we'll do the data check here in a minute. In the U.S., futures up 31, Dow futures up 219, NASDAQ is out a solid 1% plus. So that's a little bit of a lift that maybe is not identified within the Euronext. Francine, come on, 15 days to go. Cyrilli couldn't sleep this weekend. This is exciting.
It is exciting. So I've been actually excited for the last 2 weeks before this, Tom, because it's the polls, it's understanding, it's the final stretch. How much campaigning are Joe Biden and Donald Trump doing in the next 2 weeks?
It's going to be huge. And, of course, what's so different here is a British campaign would be starting about right now. These guys are in the final stretch. Money is an issue. We'll talk a lot about that. Martin Schenker joining us, I believe, in the next hour. But I'll tell you, Francine, what's exciting about this is it gets back to basics. President Trump is out there in Nevada this weekend. He's in Arizona today.
Yeah, what's different is that there are very few undecided voters, from what I understand, and actually so many people had already cast their votes. I think 62% of those are women. And now let's get straight to the Bloomberg First Word News. Here's Ritika Gupta. Hi, Ritika.
Morning, Francine. Tom, in China, economic recovery from the pandemic continued in the third quarter. GDP rose 4.9% from a year ago. That's less than expected, but higher than the second quarter number. Meanwhile, China's retail sales grew 3.3% in September, and industrial production was up almost 7%. House Speaker Nancy Pelosi has set a deadline if President Trump wants a pre-election stimulus plan. She says there has to be more progress with the White House on a deal by tomorrow. The president has said he's willing to go higher than the $1.8 trillion his team has been trying to offer Pelosi, but Senate Republicans may not go along with something that large. And global central bankers are under no illusion that they're through the fallout from the coronavirus. Monetary chiefs from the Euro area, Japan, and the UK issued warnings about new government restrictions, struggling recoveries, and the threats to jobs. They were united in their concern about their economies in an online seminar hosted by the Group of 30. Bloomberg's learned that British officials are prepared to water down Prime Minister Boris Johnson's controversial law-breaking Brexit legislation. That's a move that could revive failing talks with the European Union. Johnson's internal market bill rewrites parts of the Brexit deal he struck with the EU last year. Global news 24 hours a day on air and a Bloomberg Quick Take powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. Equities, bonds, currencies, commodities, real simple. We've got a lift to equities. Yes, it is off stimulus, but maybe some other joy there as well. Futures up 31, Dow futures up 223 to 28,631. The VIX flat, 27.50. NASDAQ 100, we're going to show that on the second screen here. I'm showing it more now as we get used to this number. We really don't follow it near 12,000, 11,928. That's the 100 stocks, 34%. Rounded up, 35% of those 100 stocks is 3 stocks. I'll let you try to figure out. It's like Jeopardy. And now figure out who is the 3 stocks in the NASDAQ 100. Renminbi, I'd also point out, stronger today. And out to new strength, Francine, earlier this morning.
Jeopardy, I like that, Tom. This is what I'm looking at. So yuan pairing gains, Chinese stocks slipping after the country's GDP was good, but still missed expectations, although the move was actually pretty muted as retail sales and industrial production did beat. I'm looking at oil fluctuating ahead of an OPEC Plus meeting. I'm also looking at pound. This is because Brexit trade talks are likely to continue at least into next week if the UK and the EU fail to reach an agreement. What I'm not looking at, actually, Tom, is European stocks, because Euronext trading has been halted in all products. This is because of a technical issue. It doesn't mean that all, of course, stock markets are closed, but this glitch affected European markets in Belgium, France, Netherlands, Portugal, and Ireland. So I'm just not looking at European stocks for the moment. Now, to talk about some of the movements in the markets, we're joined by James Bevan, CCLA Investment Management Chief Investment Officer. James, thank you so much for coming on. I want to ask about China. I want to ask about pound, but only it's one thing that everyone's looking at, and and that's the U.S. election 15 days away. How is the market playing it right now?
Well, the market appears to be discounting a Biden victory. From my perspective, of course, the issue is not just the presidency, but who will take control of the Senate. Mr. Biden, to be able to undertake his program of change, he really does need the Senate to be on his side. And that's certainly not in the bag. So I would not be at all surprised if we got a Biden presidency, but Republicans retaining control of the Senate. I suspect the business might welcome that because it would slow the pace at which the Biden change would be brought in, and it would allow business to do what it has to do, which is to develop real long-term growth and shareholder value.
But James, if you look at, if there's a blue sweep, right, and so we have Democrats taking the Senate and a Democratic president, what does that do to stocks? Are certain industry groups going to be adversely affected?
Well, undoubtedly, I would say three things would happen. First of all, Mr. Biden certainly intends to spend a lot of money, but interestingly, not necessarily a vastly larger amount than Mr. Trump would intend to spend anyway. Importantly, however, he would put up taxes, and I would suggest that we would be talking about $10 of corporate tax paying for the S&P 500 at an index level. I am expecting $155 of corporate earnings for 2021. So that would get shaved back to 145. And for me, that means a real focus on solid secular growth, high quality companies, and decent free cash flow. That's where I am positioned currently. So a good handful of the top tech companies, the Amazons and the Alphabets, together with some of the medical diagnostics companies. We are also buying at the moment US utilities and infrastructure plays on the basis that they are likely to be winners under Mr. Biden, most certainly, and not losers under Mr. Trump.
James Bevan, Tom Keene in New York. Good morning, sir. What is so important here is your ability to stay in the market. What sectors, for people afraid, what sectors of the market now provide comfort so they can participate in the market?
I would say there are three sorts of stock that I would encourage people to consider owning. There would be the solid long-term growth opportunities, and they don't look cheap at the moment. But in terms of their ongoing free cash flow, in terms of their growth characteristics, I do think that they merit inclusion in a long-term portfolio, and they would be names like Amazon and Alphabet. There are then companies which are exposed to secular growth trends but are not as expensive. Companies like Stryker, engaged in making parts for people who need hip operations and similar. The third area I think that people should be considering are stocks that relate to the resurgence of infrastructure spending. We know that the US housing market has been on fire. I would consider some of those opportunities to be strong. Right. Equally, I think the good quality utilities companies like NextEra certainly justify consideration in portfolios because of changed clean energy and the cyclical upswing in demand that I suspect the Biden presidency would bring.
You mentioned Stryker. I mean, I'm fascinated to see the parallel to President Obama if we get a President Biden. Does that just assume for you that healthcare outperforms?
I certainly think that healthcare is well placed to perform under a Biden presidency, and I would say that it's not a loser under a Trump presidency. So I am looking to find beneficiaries of a shift in policy, but not to lose if Mr. Trump is re-elected.
James, what do you do with technology stocks?
I would say that there are three sorts of technology stocks. There are those that are disruptive and making a lot of money for their investors, of which obviously I would put Alphabet and Amazon top of the league. I would say that there are then a series of opportunities which are, from my point of view, still unable to demonstrate that they can make sustained shareholder value. I would put companies like Uber into that arena. They are very destructive value for incumbents, but I have yet to be convinced that they can make money for their shareholders. The third grouping are the up-and-comers, the companies that are engaged in delivering new solutions, and indeed many old companies that are prospering very directly from the COVID-19 crisis. Indeed, if one thinks about Microsoft, a company that one used to associate only with Windows, it has risen to the fore on the back of its web services platform and, of course, its audio and video business lines.
James, what about energy stocks? So on the one hand, you have OPEC Plus meeting today to try and figure out what they do if there's a downturn in the world economy, as they're meant to put extra oil barrels on the market, I think early next year, plus Libya is coming back online in certain parts. But what do we understand about, the Biden administration's stand on energy in the U.S.?
Well, we certainly know that Mr. Biden wishes to keep the US within the Paris Agreement on climate change, and therefore he would be driving a shift away from coal and away from tar sands and away from the heavy end of the hydrocarbon continuum. And I think that that is sound investment sense. I look at the incremental return on capital employed from the oil majors, and it's distinctly poor. Those are not investments I want to hold. I want companies that are going to generate excellent long-term underlying value, for that value then to be reflected in the progress of share prices. So I would bet on NextEra, for example, and I know it has recently bought some coal business, but it has a plan for change that I do think would unlock a lot of share value.
Getting your Monday started, James Bevan with us with CCL. I really want to come back and talk portfolio construction, also active versus passive and index funds as well. Coming up, two ideas here. The thrust of the election, we'll be covering that a lot. But also a conversation with the former chair of the Federal Reserve System, Janet Yellen, with exquisite thinking recently on climate change and how it links into our economy. And also, we must speak to her about Hans Nickel's report over the weekend. Could it be Secretary of the Treasury, Janet Yellen? Look for that in the 8 o'clock hour. With futures up 31 in the U.S., Euro closed. Francine, go home. This is Bloomberg. Good morning.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Continued recovery is anticipated, which will benefit the global recovery. I think that the main risk right now we see is one is a macro leverage ratio is increasing.
The risks remain very heavily skewed towards the downside. So to borrow a phrase from sport, I'm afraid the hard yards are still to come.
All that you did not like in March
you're going to buy it in September. But the vacation that you could not take in May, you're not going to take it in October.
If growth expectations drop and financial system becomes unstable, the economy could fall into a full-fledged recession.
If you were to graph this, after the great decline that we saw in March and April, the recovery looks something like this.
Central bankers waxing fiscal, and we'll talk to Janet Yellen about that in the 8 o'clock hour as well. Her important report from Brookings on climate change. Look for that coming up here this morning. Away from economics is what to do with your money. James Bevan with us with CCLA. James, what's the active advantage right now? I mean, we talk about this. Morgan Stanley took out Eaton Vance, which is a fair amount of active management out there. I'm hearing that active's doing better. What's the active strategy now to compete against index funds and passive investment?
Well, I would say quite simply, the evidence that active management works is overwhelming unless you are too big to implement. So there are no shortage of clever people who on paper can construct portfolios that outperform. It's relatively straightforward to identify companies that are cheap relative price, and over the long run, value and price do equilibrate, subject to being able to buy enough growth. The problem that participants in markets have is that they simply don't have enough liquidity available to implement in scale. So I would say that active is now primarily the preserve of the relatively small player, and the large players who prosper have to rely on momentum where they are able to keep share prices that they already hold.
James, this came up this weekend, that one of the great advantages of alpha gaining on active is to be less diversified, to own fewer things. Is that true?
Well, I would say that there is a textbook expectation that you can get away with 30 names, and that constitutes an adequately diversified portfolio. I still think that at 30 names, portfolios have way too much specific or idiosyncratic risk, simply because there are things that we cannot know and do not see. So I do say that actually a well-diversified portfolio in a global context is much more likely 80 or 90 names. But anything beyond that, I do think begins to dissipate the value of really understanding what you're buying, and therefore getting exposure to the secular growth trends that will drive long-term returns.
James, if the world, and especially Europe, is becoming more like Japan, I don't know whether it's still Europe or the U.S. also is at risk of becoming more like Japan. What stocks, what kind of assets do well in a Japan-like world?
Well, it is certainly secular growth. If you were to look at the passage of what happened in Japan, the government bond market did extraordinarily well as the Bank of Japan bought virtually every bond in issue, and people who held bonds at what were considered to be relatively low levels continued to make money on the greater fool theory, the ultimate buyer, of course, being the Bank of Japan. But the good quality export stories that were able to deliver product out of Japan into the rest of the world did their investors extremely well. And there are specialist companies in Japan in the field of, for example, bicycle manufacturing that people the world over recognize are market leaders. And that's where real stock market returns can accrue.
Yeah. James, how much do you worry, or how much do you think about the possibility that we're actually putting the seeds for the next financial crisis because of depressed yields? People in the search for yield go into risky markets and risky assets, and the next downturn, this will all end up in a financial system crisis.
Now, I worry all the time about these major challenges. I think that the comfort I draw in the current environment is that we now have central banks and governments working together and working in a manner that is consistent with an expectation that they care about the financial system. I mean, if I want to think about prior periods of material meltdowns, such as in the 1930s, that's when governments and central banks were most focused on the gold price. Now they're focused much more on the price of assets. And indeed, financial indicators such as stock market levels and bond levels are part and parcel of the data that central banks and governments use to be able to compile their policy.
James Bevan, thank you so much. And what Mr. Bevan said there, folks, about diversification is really important. It is gospel, to say the least. He is with CCLA. There's a lot going on here. Again, futures up 32, more U.S. quotes because Euro's shut down with a technical glitch. Coming up, Marilyn Watson, BlackRock, they're head of global fundamental fixed income. fixed income, I say, strategy. Stay with us on a Monday. This is Bloomberg.
Some things you see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance. I'm Ritika Gupta with your Bloomberg Business Flash. We're one step closer to what could be the world's largest IPO. Jack Ma's Ant Group has won a key approval from Chinese regulators, they say, and can list its shares in Hong Kong and also plans to list shares in Shanghai at the same time. The company could raise about $35 billion from the dual listing. One of the world's largest alternative asset managers is launching a new partnership with American equity investment Life Holding. Brookfield Asset Management will acquire a 19.9% stake in the insurer. American Equity just rejected a proposed $3 billion takeover from Athene Holding and Mass Mutual. And Royal Philips reported third-quarter profit that beat estimates. The Dutch company sees high demand for its medical gear in the coming years. The reason, the lingering impact of the coronavirus and changes in the way healthcare is delivered. And that's latest Bloomberg Business Flash. Francine, Tom.
Ritika, thanks so much. On the data, futures up 32 with a little lift here in the last hour. Where are we? Well, we're above the center tendency back 6 weeks. That's where I would put it. Futures up 32, down futures up 226. And we're above the center tendency of the last 6 weeks. Are we going to break out? Don't ask me. But what I can tell you is we start the week constructively. Renminbi stronger off GDP reports. Francine?
Yeah, I also had yuan in there, Tom, just because that's one of the most interesting things. Look, Euronext trading has been halted in all products. This is because of a technical issue. It's Tom.
No, it's just a great song. You say yuan, I say renminbi. Yuan, renminbi. Continue.
Stocks including L'Oréal, LVMH, and Kering are halted because of Euronext. Look, renminbi is interesting. Yuan is interesting, Tom, if you want to say that, because of that better than expected, consumption
it's a good number.
Story. Although GDP was actually a little bit below estimates. And then look, UK. Yeah, I'm a harsh critic, Tom. UK is preparing to rewrite this law-breaking Brexit bill, and this could mean that they're not talking at the moment, but it could mean that talks could be restarting, and so we're seeing a bit of movement on pound as well. Coming up on Balance of Power, the SIFMA President and Chief Executive, Kenneth Benson. That's at 12 p.m. in New York. That's 5 p.m. in London. Don't forget, 15 days until the U.S. election. This is Bloomberg.
Gender-neutral language at the airport and on its flights. Instead of the greeting, ladies and gentlemen, the English announcements now use phrases like all passengers or good morning and good evening. There's no change to the Japanese version because we already use which is the honorific form of everybody, and that's already gender-neutral. JETA becomes the first Japanese airline to make the change as part of its greater initiative to tackle gender-based discrimination, following some other carriers. Air Canada and EasyJet started using gender-neutral greetings last year. Japan Airlines also ditched its mandatory high heels and skirts rule for female flight attendants earlier this year after the Q2 movement went viral on social media. That was the nationwide campaign to fight the rule that some women must wear high heels at work. So JETA now allows female flight attendants to wear trousers and flats if they want. Activists here have been pushing for change, fighting against entrenched gender traditions. The Japanese government does not legally recognize same-sex partnerships, although a growing number of cities have started to. So this change towards gender-neutral language could be a symbolic step for inclusivity in Japan. Explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe. This is Bloomberg Surveillance. Tom and Francine from London and New York. Tom, I know we have to talk about Brexit. I'm also distracted because I was just looking at Larry Cat on Twitter.
saying, I'm fed up with Brexit, send me pictures of your humans working from home. But that's a whole other story, because we need to focus on Brexit. Government officials are preparing to water down Prime Minister Boris Johnson's illegal Brexit legislation, a move that could then revive failing trade talks with the EU. Now, the bill begins its progress through the Lords today. Well, joining us now is Edward Evans, Bloomberg's Brexit editor. Ed, I mean, this has been lasting a really long time through twists and turns. We understand now that they're not talking, the UK and the EU, but that the talks could continue next week or later this week. Am I right?
That's correct. Boris Johnson left the door open to negotiations to restart on Friday. In fact, the two sides' chief negotiators, Michel Barnier and David Frost, are going to have a telephone conversation this afternoon to discuss the state of play. For talks to resume, really sort of three things have to happen. One, the EU has to agree to intensify talks, something actually European Commission President Ursula von der Leyen went some way towards doing last week. The EU also has to suggest it's prepared to compromise, and that again is something that Angela Merkel suggested the bloc could do on Friday. So 2 out of the 3 conditions, some way to being met. And the third, that both sides need to start working on the legal text, is something that the chief negotiators could agree between themselves. So you could see a path to talks resuming, but the problem here is, of course, the deadline is fast approaching. The transition period ends at the end of the year. You need a couple of months to ratify and implement any agreement. So that puts the effective deadline, as it were, at the end of October, early November. So there isn't much time now to restart talks, and the risk here is that we get to that deadline at the end of this month without talks restarting.
Ed, first of all, Australia, Canada Plus, are these all semantics? I mean, you know, at the end of the day, are companies moving out of London and the UK because they just can't deal with the uncertainty?
Well, they are facing a lot of uncertainty. I think the key thing here to remember is even if there is a deal, a lot of things are going to change for business, specifically for people exporting into the EU. There's going to be, of course, Britain is going to be outside, whatever happens, Britain is going to be outside the EU's single market and customs union. And that means that goods going across the border are going to be subject to customs checks. You're going to have to fill out customs paperwork. This is stuff businesses really haven't had to deal with for 3 decades. Add to the fact they've been dealing with COVID at the same time, and you've got a lot of unhappiness amongst businesses at the demands that are being put on them. And the government this week is starting its advertising campaign, essentially telling them time is running out as part of that.
Edward Evans, there can be the unexpected, like there was yesterday with West Ham and 3 goals, including the last one against the Tots, against the Spurs of Tottenham. What's the unexpected here for Boris Johnson? What's the West Ham for Boris Johnson?
I'm going to steer clear of football or soccer, I should say, metaphors. But I think the unexpected here is actually that 2 sides could be much closer than it actually appears. If you look at it, the 2 key issues are fishing and state aid, and they've been the 2 obstacles to a deal for some time. It looks like they're pretty close on state aid. Fishing was always going to be the difficult last one to crack, in part because of French sensitivities on that subject. And it may be that actually this is just the final, it could be that this is the final explosion before you get a deal.
Fine. Is Merkel come in? I mean, you know, as a dummy on this, and I'm like, okay, great. But if it's Macron's the one because of fishing rights and all the domestic politics he has to face, is Merkel caught in the middle, or is it Rutte, or is it somebody else?
Well, Merkel is the one who does look as though she's edging towards a compromise. Actually, I think of everything on Friday, her comments were actually the most interesting, because she was suggesting there is a recognition on the EU's part that Britain is going to go a separate way, and 2, on state aid in particular, that's going to require a different way of enforcing any agreement. Now, that is quite a big give from the EU, and a sign that actually, really for the first time in this, that Merkel is prepared to help the British in these negotiations. Don't forget, one of the sort of recurring themes of Brexit has been that Britain hopes that Germany will ride to the rescue, and it doesn't. But it does look like this time that if they're not riding to the rescue, then there's certainly some suggestion that they might possibly be prepared to compromise on just this one point.
But Ed, just to understand, on the UK side, are they also ready to compromise, or would Boris Johnson, because it's his legacy, would he be okay with going under WTO rules come January?
Johnson has been clear that he is prepared to go out of the EU without a deal under WTO rules. I think if you look at sort of Michael Gove in the cabinet, who's actually been responsible for the preparations for no deal, he's been much more cautious about that option. I think what was interesting over the weekend was seeing Gove making the point very clearly that leaving without a deal would be no picnic. This would be a very big disruption for business, and there'd be very, very meaningful disruption at the end of the year. I think COVID has played a big, has really changed the calculations here for the government. Johnson's fighting a lot of political fires now on different fronts. You've got a big argument over the government's handling of COVID. You've got a big fight going on between the government and the mayors in the north of the country over further lockdowns. Is Brexit a fight that you particularly want to have at this moment in time? And that's a very, very open question.
Thank you so much, Edward Evans, there, Bloomberg's Brexit editor. Now let's get straight to the Bloomberg First Word News. Here's Ritika Gupta. Hi, Ritika.
Hi, Francine. Tom, House Speaker Nancy Pelosi has given the White House if there's no more progress on a proposed stimulus package by tomorrow, it won't get done before the election. It's not just the House and the administration that are involved. Senate Republicans are balking at the size of the package. Still, President Trump says he's confident he could persuade the senators to back a good deal. President Trump is trying to put a positive spin on his fundraising deficit to Joe Biden. He's telling supporters that he could raise money quickly, but he doesn't want to be beholden to donors. Trump's campaign and the Republican National Committee raised a combined $248 million in September. That was well short of Biden's $383 million. A ceasefire between Armenia and Azerbaijan has fallen apart just hours after taking effect. It's the second truce brokered by Russia this month that failed to stop the violence. Hundreds of people have been killed in the 3 weeks since fighting broke out over a disputed region. And OPEC and its allies meet today over its plan to ease output cuts. The pandemic is again threatening oil demand, and the cartel's own internal reports point to the risk of a new surplus. In private, delegates say they're open to delaying an increase in production. Global News 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Everything around us, including the way we work and live, has been interrupted. Uninterrupted service is peace of mind. Kimmy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
Melinda Gates, thank you so much for joining us on Bloomberg Studio 1.0.
Bill and I always look for any philanthropy we do to fill some of those gaps.
I'm Emily Chang, and this is the best of Bloomberg Technology. We're reviewing you all our top interviews from this week in tech.
I think Facebook's how we won in a lot of ways.
Do you ever take any of the tips and give them to your LA Clippers coach?
No!
I will stand up for Canadian interests. I will only sign a deal that is good for Canada.
Coming up on Bloomberg Best, the stories that shape the week in business around the world.
Welcome to Bloomberg Big Decision. Really good to have you here.
Thank you so much for having me today. We know this business inside and out.
You've really built a conglomerate.
We saw amazing opportunities in the Middle East.
They had the dream. You had to bring it to reality.
Between the three of us, we can really do anything.
I feel like this is where we should go.
Good morning, everyone. Bloomberg Surveillance. Francine Lacroix in London. I'm Tom Keene in New York. We've been covering any number of topics. Yes, the U.S. election front and center, except there is one thing that will not go away. It is the persistency of the pandemic. We're thrilled to bring you from the University of Brighton, a lecturer in microbiology and Institute of Biomedical Research fellow, Sarah Pitt, joins us right now. Professor Pitt, thank you so much for joining us today. I don't buy the idea of second wave, third wave. If it's not a wave, what is this resilience, this persistency of this virus?
Well, yes, you're right. It's not really a wave because it never really went away. It's just come back again in greater numbers. So, and it's very resilient because it's very, very infectious, and because any opportunity for it to be transferred from person to person, the virus will take it. And we are all around the world, people are giving it that opportunity by coming in relatively close contact and allowing it to spread from person to person, and that's what's happening.
Right. Dr. Pitt, you are definitive in clinical microbiology, your work with parasites across all of these bugs, if you will. You know the number one issue is pneumonia. You get the secondary infection. What have we learned from February and March about the overlay of this virus with pneumonia, and particularly as we go into the winter season?
Well, actually, in fact, what we've seen in this virus, it's not actually secondary pneumonia. It's caused by the inflammation reaction of the body, which is causing the damage in the lungs. So it's not the same as with influenza, where you're right, with influenza, the main problem is actually a bacteria will come in, and while your immune system is trying to cope with the influenza infection and is in all over the shop because of the influenza infection, a bacteria will come in and cause you secondary pneumonia, and that's what is the major cause of mortality in influenza. That's not the same with this one.
But Professor, good morning. What do we understand about why certain people get it really badly, and in other people it's barely more than a cold?
Well, I mean, there are lots of factors involved in it, and we don't really know the answer to it. And it's one of those things, it's actually, we probably won't know the answer to this until we can sit down and reflect on all the information that's coming in. Day after day, there's new information coming in, new papers being new epidemiological data, and actually we're just kind of reacting to it. And in 18 months' time or something, when it's kind of died down, we'll be able to really reflect on the information that's coming through, and then we might have a better idea. At the moment, we're at the stage where we're saying, observing that these things are happening and trying to do something about them, rather than really having detailed scientific explanations of why they're happening.
Yeah. But Professor, for me it's crucial because it seems that, you know, we were warned at the start of the pandemic that people will have lockdown fatigue, that actually they won't take all the guidance and what the government is saying seriously after a long period of time. So how do we get people back on track?
I think you have to really explain to them that anyone can catch it, anyone can spread it, even if people are don't have serious illness themselves, they can still pass it on to other people. It's very, very infectious, and you don't actually know who is going to end up with serious illness. It is true that most of the people that have died have either had underlying conditions and or been slightly older. However, young people are dying, and the thing which is coming out now, again, from all over the world, is this idea of the sort of post-viral syndrome that can go on for months and months and months, which they're calling long COVID certainly here in the UK, we're calling it long COVID. Maybe 10% of people end up with some side effects which they can't actually, which haven't gone away yet. They might go away in time, but it's too early to say how long those might take to resolve.
I mean, what's the difference here, folks? We're not talking a bunch of fancy theory. We're talking Sarah Pitt in the trenches of clinical biology, clinical microbiology. Is it an equivalency to mononucleosis?
No,
I'm
not sure.
COVID?
No, because mononucleosis. Possibly, it's more likely. It's much more like post-viral fatigue syndrome, sort of ME, and those type of ones. But and sometimes people their organs have been infected. But the main thing that people are saying they experience, apart from actually there are several different types of things that people are experiencing. But there's the lethargy, there's the difficulty in breathing, which you don't really get with with EBV, mononucleosis. Sorry, you do go on feeling, out of sorts for quite a long time with EBV infection, but it doesn't affect it. It's not affecting all of your organs and all of your body in the way that some people with long COVID are experiencing. Not all of them.
Right, Sarah, I got one final question, and this is with immense respect for the trenches of clinical microbiology. Long ago and far away, I actually put a gram stain on the ceiling, blowing it up, and they said, no, this is not for you. What has humbled you in this pandemic? What is the thing? You're world-class in parasites and all the things we're afraid about. What's the one thing with this virus that scared you?
Scared me. Mainly it's the way people have reacted to it, and the fact that some people are just not taking it seriously and are trying to say that it's not real, or they're not actually facing up to the reality of it, which is giving the virus more chance to spread from person to person. I do think that it's something we can get under control, because its very close brother, SARS-1, went away. By the middle of 2004, there was no SARS-1, and it went away altogether. So I do believe, everybody tells me, particularly my husband, that I'm being very optimistic and idealistic, but I do believe that we can actually get rid of this. But we will have to work together to make it happen.
You got to go. We don't allow optimism on this show. Sarah Pitt, thank you so much, from the University of Brighton. Greatly appreciated. Please stay with us worldwide. This is Bloomberg.
When opportunity knocks at the door, don't say, blimey, I've still got my pajamas on. Say yes to stuff and it will take you interesting places.
We're clearly going through some very unusual times and, enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with Lacqua.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance. I'm Francine Lacqua in London. Tom Keene in New York. Tom, extraordinary monetary policy moves during the pandemic have motivated investors to find new opportunities for mitigating risk. We talk about it day in, day out. Well, another great voice, Dwight Scott, global head of Blackstone's GSO Capital Partners, spoke exclusively with our Sonali Bajak. Here he is.
Well, I worry about the fact that rates are so low today that the wind that's been at our back as investors for a long, long time of falling rates, we don't have that in the credit markets. Now, investment grade is inside of 2%. So you're getting duration risk. So you're having you're making long-term investment decisions, and you really don't today know how long rates are going to stay this low. So I worry that as you see rates start to tick back up, which I don't think is going to happen in the real near term, but over time as those rates tick back up, those fixed income exposures you're going to have to be really careful about because you're not getting a lot of yield to offset an increase or a decrease in pricing caused by an increase in rate. So I'm cautious about that.
How does that change the way you underwrite your expectations here?
Well, once again, it gets us back to this difference between the private world and the public world. On our public strategies, we are definitely moving higher in the value chain. We want better companies, better management, strong sponsors in our leveraged loan business because we believe those businesses will outperform and they'll grow into their capital structures or grow into less leverage. So that's how we're managing that on our levered loan side, for instance. On our private side, we're able to kind of jump in there and take advantage of dislocation. So if a company is coming to the market, if a sponsor, a private equity firm wants to buy a public company, they can't really finance that in the bank markets because they need full committed capital. So we can step in there and provide significant capital. We did that for a large chemical acquisition in Europe this year, where we provided half of the financing they needed before they made their bid, and then they went out and placed the rest of it later. And so I think those kind of situations in this kind of market will be where we are more aggressive.
It's funny. I was about to just ask you, in the heat of the pandemic, what kinds of risks you're not worth taking, but you just pointed to an opportunity there. It's worth asking you then, what opportunities are you seeing to put money to work? What looks like the most investable opportunities?
Well, I do. We are seeing, I want to be careful because we are being cautious. We've been talking to our investors about this concept of cautiously active for the last 6 months. And what we've described that as, we are worried about where this pandemic leads. We don't really have great insight into when we'll be back in theaters or we'll be back on airlines. And so we've been cautious about that, but we've been active because the higher quality names traded off with the lower quality names, and we were able to invest in those, and the private market shut down and began to reopen, and we were able to invest in that. And so we believe that there's always going to be an opportunity. I'll give you an example. We did across Blackstone, so in the credit business, in our life sciences business, in some of our other businesses, we provided $2 billion to this company called Alnylam this year in the middle of the crisis in the form of a royalty, in the form of a loan, in the form of some equity. And that $2 billion was critical to that company to push through this cycle and to grow. And so I think we'll always see those opportunities, and we'll try to make sure we use the value of our platform, the scale, the broad nature of our products, because those things will give us those one-off, take a shot and do something really important in these markets. At the same time, we'll continue to make the investments in the public side of our business.
Dwight Scott with Sonali Bassick there. He is with Blackstone. Right now in the data, it's real simple. Risk on with futures up 30, NASDAQ 100 doing its usual out front ballet. Yields come back 3 basis points, a higher yield on the 10-year, 0.77%. 30-year bond out to a 156. Again, a 3 basis point move. Please stay with us. It is a most eventful end of October. Conversation on economics, finance, politics, and more politics. Christopher Verone with a chart of the election. This is Bloomberg. Good morning.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
Is it your expectation to do this another 5, 10, 15 years?
It's like Whole Foods is my daughter, and I literally married my daughter off to the richest man in the world. I just kind of came along to make sure the marriage settled in well.
This morning, the locomotive, it is underway as China delivers economic growth. Pelosi and Trump, well, they deliver stimulus chat. McConnell, he will, quote, move to break the logjam. Stocks higher this morning, yields as well. 15 days to the election from Prescott to Tucson. Find Prescott on the map. The president dashes 212 miles this Monday. Biden will spend more than 212 minutes in debate preparation, Nashville on Thursday. And how about that Vuja Day? What were you thinking 4 years ago today? Democrats say Biden is stronger than Clinton, while Republicans say they are, quote, just waiting in the wings, and they will quietly cast their vote for Trump. Good morning, everyone. This is Bloomberg Surveillance, an extraordinary Monday, 15 days out from this election. Francine, how's the election playing in London? Does anybody care, or are they all wrapped up with West Ham crushing the Tots?
Everybody cares, Tom. It's actually one of the most exciting U.S. elections in recent memory. Something that I think all the papers are leading with here in Europe. Now, the focus is really on 4 key states. I know in the U.S., but for a European, if somebody comes on and says, look, Iowa could turn Democrat, Georgia. We're also looking at Ohio and Texas. I mean, as a European, a lot of the newspapers and broadcasters are trying to figure out whether that's really something that could happen and what led to that if it were the case.
Well, why the president goes from Nevada this weekend to Arizona. I looked at all the states this weekend, and, the break even in Florida is there. But to your point, Francine, you're an expert on this. You nail it with Georgia being that close right now. Right now, with our first word news in New York City, here's Ritika Gupta.
Morning, Tom, Francine. In China, economic recovery from the pandemic continued in the third quarter. GDP rose 4.9% from a year ago. That's less than expected, but higher than the second quarter number. Meanwhile, China's retail sales grew 3.3% in September, and industrial production was up almost 7%. House Speaker Nancy Pelosi has set a deadline if President Trump wants a pre-election stimulus plan. She says there has to be more progress with the White House on a deal by tomorrow. The president has said he's willing to go higher than the $1.8 trillion his team has been trying to offer Pelosi. But Senate Republicans may not go along with something that large. And global central bankers are under no illusion that they're through the fallout from the coronavirus. Monetary chiefs from the Euro area, Japan, and the UK issued warnings about new government restrictions, struggling recoveries, and threats to jobs. They were united in their concern about their economies in an online seminar hosted by the Group of 30. And Bloomberg's learned that British officials are prepared to water down Prime Minister Boris Johnson's controversial law-breaking Brexit legislation. That's a move that could revive failing talks with the European Union. Johnson's internal market bill rewrites parts of the Brexit deal he struck with the EU last year. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom, Francine.
Ritika, thanks so much. Risk off, a little bit ugly there, the end of last week. We go the other way right now. We're in the range. I want to make clear off Standard & Poor's 500, we're above the center tendency going back 6 weeks. So there's a little bit of a lift all in all to the market. Futures up 29, Dow futures up 209. The VIX not printing at 27.47. Francine, you've got the small matter of a market closed in Europe. Is that right?
Yeah, so a lot of the stocks, Tom, and derivatives were actually closed on Euronext. So, a couple of the other ones, including the FTSE, are still open. And in those markets that are open, I'm looking at banks and insurers leading gains, healthcare and energy firms actually lagging a touch. But overall, the focus, of course, is on China after they had some pretty good and encouraging data out of China. So if you look at renminbi, that's moved a touch. And the other thing we're watching out is the U.S. 10-year yield. I'm not sure that's my data check, Tom, but we'll get it right next time.
That's okay.
I wanted also to look at pound at 130.04.
Yeah, it was better than mine, to say the least. Right now, over the weekend, on one of the 47 topics of this historic election is stimulus. Here is the Speaker of the House.
We're saying to them, we have to freeze the design on some of these things. Are we going with it or not? And what is the language? I'm optimistic.
Speaker Pelosi there over the weekend, and this is a movable and changeable feast. Right now, a 3-hour conversation with Martin Schenker. He's Bloomberg's chief content officer. Marty, I got like 7 minutes with you to squeeze all this in. What's not in the zeitgeist this morning, Marty, is this debate going to happen? Are we going to have a debate in Nashville, or could it be canceled?
No, I think there will be a debate this Thursday. The question is it going to matter to anybody?
Okay, well, that's fine. I mean, as you well know, over the weekend, people are cutting curtains for the Biden administration, on and on and on. I mentioned Yogi Berra in the lead with Vujade. Marty, what I find fascinating here is the way the Democrats have to play this forward. What is the Biden message to the troops?
The Biden message is, and I've said this before, Tom, is do no harm. I mean, he is doing his best and doing a very good job of being non-controversial, being a traditional candidate in contrast to Donald Trump, whose rhetoric is becoming increasingly, vitriolic at his rallies. And so that contrast is something that Joe Biden thinks works for him, and the polls suggest he's right.
Marty, how does early elections actually, how does that affect the polling or the forecasts?
Well, you know, it's really interesting, Francine, that early voting has started in something like 12 states. The latest numbers I saw, the equivalent of about 20% of the people who voted in 2016 have already voted. So a lot of the people who are out there have already made up their minds the debate is not going to matter, and the polling suggests that many of these people are Democrats voting for Biden.
Marty, how's the race in the Sun Belt states? And actually, is there a way where President Trump can pull off getting reelected with 2 weeks to go?
Well, you know, Francine, the polls are what they are. For those of us who are following this election for a long time, like I have, remember very well 2015 and sort of the jaw-dropping numbers that came out despite the polls that night, that Donald Trump won the presidency. So people like me, and I think a lot of other people, are just holding their breath, waiting for these results to come in.
Marty, Hans Nichols at Axios launched the Sunday Note that everybody reads, and you know they're starting to pick out cabinet members here. We have Janet Yellen on in our 8 o'clock hour today. Folks, I have to open that interview with the discussion of Treasury Secretary Yellen and all the other pressures as well. Marty, what do you perceive as a pressure of President Biden to pick a perfect cabinet?
You know, I think there's going to be, right now, the various factions within the Democratic Party are basically holding their fire because they're all focused on one thing, and that is defeating Donald Trump. But once that happens, the factions will be coming out in full force. The far left, the moderates, all trying to influence Joe Biden. And that's going to be the story after of this election.
I mean, assuming that the vice president takes the trophy here and is elected, Marty, it's absolutely fascinating. This happens in every election. There's no, whether it's Secretary Yellen or Secretary Ferguson and on and on and on. If that's the case, and if we get out after the election, who polices this for the newly minted president?
Well, Joe Biden has a lot of close, advisors. Senator Coon of Delaware is one of them, and it'll be interesting to see whether the people who are his advisors are on the more moderate side of the Democratic Party. So you will see a lot of far left people watching and waiting to pounce if he basically goes to 50-year politicians for those jobs.
Now, this is fascinating. This is why we love having Mr. Schenker on. He gets a little bit out front of the debate, maybe a debate for the middle of November or even into December as well. Marty Schenker, our Bloomberg Chief Content Officer. Coming up today, of course, as I mentioned, Chair Yellen will be with us. She has an important report out on climate change with her Brookings Institution. But I will begin that conversation with what we heard over the weekend, the speculation of Chair Yellen as Secretary of Treasury. This is Bloomberg. Good morning. Futures up 28.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture. Growth is a way to stay competitive, delight more and more consumers.
Welcome to the best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Good morning, everyone. Bloomberg Surveillance. Thrilled you're with us on politics. Yeah, a little bit of investment in economics as well. Francine Lacroix in London. I'm Tom Keene in New York. Futures up 26, up a little more earlier. Dow futures up 187. Sure to the market. Renminbi stronger, 6.68. We had renminbi out to new recent strength off a better than good GDP report. The makeup of it was better than good, I should say, even though the statistic was a little bit south of consensus. Right now, not of the fundamentals, but the indications along the X and Y axis. Christopher Verone joins us from Strategas, their head of charts of technical and macro strategy. Christopher Verone, what is the trend right now?
The trend is up, and I think that's hard to debate. I think the bigger question is, what is the message the market's trying to communicate to us? And I think when you look at the leadership fabric of this market, it really continues to suggest two things. I think number one, the pace of the economic recovery we think is stronger than the consensus believes. We think the market's telling us that. And I think secondly, the market is telling us that a multi-year bear market in cyclicality is probably over. And there's so many different derivatives of that, everything from copper to aluminum to Aussie dollar to consumer discretionary. A lot of these things peaked in late 2017. We think they've firmly, officially have broken out of those multi-year bear markets.
Okay, Chris and I could go, well, you know, fancy tech talk here. We're not going to do that on a Monday. We save that for Wednesday. But Chris, what I notice in the equity moves is a lack of catharsis. In the point and figure space, you need a catharsis in what's called a low pole. Down you go and you come back up and then you finally move higher. I don't see the catharsis. Where is it?
Well, I think we should think about this the other way. I mean, we're sitting here, S&P is still called 100 points off the early September highs, yet the advanced decline line on the S&P has already made new highs. So I think if anything here, the opportunity set, Tom, is actually getting broader. Participation is broadening out. This is something investors have been craving for 2 or 3 years here, for this market to be driven by more than just tech. And that's not an indictment of tech right now. Tech is still fantastic, but tech is not the only game in town anymore. Tech is no longer working at the exclusion of every other sector, and that is something we should welcome as investors. So that advanced decline line making a new high, I think, is important. You have more stocks in the S&P right now above their 200-day moving average at any point during this recovery. Same thing for Russell, too. The opportunity set is getting broader.
But Chris, overall, when you look at what the market is looking at, is there a greater gap now than ever before in what we're seeing in the economy, the fundamentals of the economy because extra restrictions and going towards possible lockdowns, and actually what the stock market is doing?
You know, I think, Francina, I think really great question. I would push back from two perspectives. I would say, number one, the market just doesn't buy the second lockdown story, even in Europe. If you look at Europe, European cyclicals have continued to outperform despite what have been bad headlines for, 5-6 weeks now. I think that's notable. But as far as the divorce between, or the perceived divorce between the market and the economy, that is not unique. I would encourage everyone to go look 5, 6, 7 months off any major market bottom in history. You will not like what the economy was. So something that we've looked at extensively is the relationship between employment and stocks. Typically 5, 6, 7 months off a market low, you're still losing jobs. So I think to to certainly acknowledge this has been a unique crisis is appropriate, but I don't think it's appropriate to say the market's response here has been any different than what the history has shown us in the past.
Chris, if you break it down, regions or countries, where do you see the best value? China came out with some pretty stunning GDP figures. You know, if we have a healthcare war between the U.S. and China, does China win?
So we actually like the Chinese stocks here. We both like the A shares and Hong Kong. Again, very tech-driven market in some respects, but it's not just tech working in China. The Shanghai industrials have broken out. The Hong Kong industrials have broken out as well. I think the best opportunity, though, in the kind of greater Asia landscape is Japan. Nikkei is on the cusp here of a major breakout. Actually, if you look at the Nikkei 500, which is a broader index than the typical Nikkei 250, that's already broken above its December 1989 high. So 30 years of nothing in Japan is being resolved higher. And think about the irony of this for a minute. Japan is a country that's been trying to escape deflation for the last 20 or 30 years. And then we have what may have been the most profoundly deflationary event of our lifetimes a couple months ago, and Japan chooses then to break out. Will COVID prove to be the exclamation point or the end of 3 decades of Japanese deflation? Is that what the stocks there are telling?
I have to go technical here. I'm sorry. You know, Chris, come on. China, I mean, Japan, up they go. And isn't it red zone, green zone, where they get up to this point and it's enough and they fall back as they've done for a million years?
You know, I think the difference is, Tom, that the number of Japanese stocks starting to outperform, that list just continues to grow every day. And, you know, if you think about the Japanese index, it's kind of the right constituents. You have a good tech group, and you also have a lot of industrials, a lot of transports, a lot of rail. That's a pretty powerful combination in terms of what's working right now in this environment. So we like the leadership. I like the strength from the broader Japanese indices, and I like the fact that leadership has turned more cyclical in that part of the world.
Tom, we have breaking news. Euronext is resuming its cash and derivatives trading. That started about 2 minutes ago. They've just put out a headline. I know you usually get all teary-eyed. At the moment, Euronext just saying that they've resumed their cash and derivatives trading. That happened last 2 minutes, so we're expecting some kind of adjustment because it has been closed for about 3-4 hours. We still don't know what the technical fault is, but Tom, we'll try to get to the bottom of it and of course, bring any news to our viewers and listeners.
You can't see it, folks, on the floor here, but there's sawdust thrown on the floor, and there's a cigar spittoon over here. When the markets close down, I don't. Well, usually I miss the spittoon, but I haven't. You know, I like shut things down until they reopen.
There you go. They've reopened.
They reopened
after 3-4 hours. All right, we'll have plenty more, of course, on this. Chris, I don't know whether you look at some of these technical faults. I mean, I know this was very, you know, Euronext related, but does it just mean that it's an off day for trading?
Yeah, it certainly seems that way. I'm not quite sure what happened over there. I think, you know, what's unique about Europe is when you think about this market, it's been a lagging continent for a long time. I think what's interesting within Europe now is actually where some of the outperformance is coming from. It's coming from Sweden, a market with a lot of China exposure, a lot of industrials. So, you know, stepping away from the one-day issues they seem to be having there, I think when you talk about leadership in Europe, look to Sweden. It's a really good market.
This is amazing. I've never heard Verone go so international on me. We've got to come back. We're going to be with Chris Verone in the next half hour here, right at the bottom of the hour. So please stay around for Chris Verone, and we'll look at that widely predicted domestic to international shift that hasn't really worked out. Maybe now's the time after Verone on Japan and on Sweden. He is with Strategas. Futures up 25, Dow futures up 179. Maybe not the lift of before, but nevertheless, we note a stimulus-based lift today. Way too much equity chat this morning. We have to straighten that out. Marilyn Watson, BlackRock, head of global fundamental fixed income strategy. We do that in a bit. Stay with us. This is Bloomberg.
has been interrupted. Uninterrupted service is peace of mind. Juzi from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
I am David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Bloomberg Surveillance, I'm Ritika Gupta with your Bloomberg Business Flash. We're one step closer to what could be the world's largest IPO. Jack Ma's Ant Group has won a key approval from Chinese regulators. They say Ant can list its shares in Hong Kong and also plans to list shares in Shanghai at the same time. The company could raise about $35 billion from the dual listing. One of the world's largest alternative asset managers is launching a new partnership with American equity investment Life Holding. Brookfield Asset Management will acquire a 19.9% stake in the insurer. American Equity just rejected a proposed $3 billion takeover from Athene Holding and Mass Mutual. And Royal Philips reported third-quarter profit that beat estimates. The Dutch company sees higher demand for its medical gear in the coming years. The reason, the lingering impact of the coronavirus and changes in the way healthcare is delivered. And that's the Bloomberg Business Flash. Francine, Tom.
Ritika, thanks so much. Again, we had a lift of the market, up 30-some earlier, now up only 25, but nevertheless a very nice correlated risk-on-feel. Yields 3 basis points higher, just barely 0.77% in the 10-year. Oil flat, $40.61 on American. Brent crude, 42, rounded up to $43 a barrel. I'm stretching that. 19.16 on gold. Francine, what do you have?
Well, first of all, European stocks and derivatives have resumed trading, Tom.
Good.
So let's see if there's an impact on that. Overall, I'm looking at stocks and they're actually up. Banks and insurers leading some of the gains. The pound also jumped as British officials are now signaling they're ready to water down some of the controversial Brexit legislation. So again, this move could then reopen talks with the EU. And then the other thing I'm watching out for is, of course, renminbi or yuan, Tom. And this is on the back of that GDP 4.9% growth. That was a bit below expectation, but actually some of the other media, I think retail sales were really outstanding, really much better than expected. European stocks, you can see, gaining some 0.3%. Now, coming up in Bloomberg Markets, Jonathan Golub, he's Credit Suisse Securities Chief U.S. Equity Strategist. That's coming up at 10 a.m. in New York, 3 p.m. in London. The other thing I'm watching out for, Tom, is some of the yields on European bonds. Now, we did have Christine Lagarde speaking to the French newspaper Le Monde. It was a pretty long and lengthy interview focused on the tools that the ECB still has at hand. I saw some great notes by Kit Jukes on the value of euro, certainly compared with what the UK and pound could be doing. Just a virus update, a short one, but global cases topping 40 million as European infections number actually surged by quite a lot. We have new restrictions across many countries, and then we're 15 days away from the election in the U.S. Up next, we talk U.S. politics. This is Bloomberg.
ada 3 kelompok pengungsi tersebut yang sudah berpencar arah. Kemudian kami dari Polsek Banda Sakti berkoordinasi dengan perangkat desa Kampung Jomblang melakukan upaya pengumpulan secara persuasif serta minta tolong kepada warga. Alhamdulillah warga yang terpecah semuanya berkumpul.
Valuations, particularly sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This recession, what we need is more fiscal stimulus, really to help small businesses and the unemployed. Maybe a couple industries. It's not monetary stimulus. It's just they need that help to get them through to April, May, June of next year. A gradual return to work. So I think we kind of need that too to stop. Like I said, like some of the scar tissue taking place, and that will maximize the chance that we have a better outcome.
So we've had I'd call it a short-term phase 1V, largely driven by government intervention. So the global trade, to me, that Jose mentioned, I think is very supported by government intervention all over the world. The stimulus has been, sort of awe-inspiring, actually, in terms of the speed and size, both, monetary initially and now increasingly fiscal. And we'll come back to that in 1 second. We're pretty optimistic in the near term. We've got pretty constructive views on the global economy, fourth quarter of this year and into 2020.